Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 5th day of June, 2013. A quick look at the numbers. The Dow is down 129 points. S&P is down 14. Comp is down. Let's back that up. S&P is down 18. Dow's down 165. NASDAQ is down 36. Gold is up $7.40, and crude is up 56 cents a barrel. Well. I hope you had a great morning. It's been almost 24 hours since we last met. I hope life has been kind to you and that you've been kind to those around you. All right, if you're new to this radio program, here's a shakedown. I am going to share with you a good word for the day, very brief. Then I'm going to show you a couple things on the hourly chart of both the S&P and the Dow and soybeans. I'm going to refrain from going over the news headlines today, even though I got some real gems, let me tell you. Maybe we'll go over them later in the radio program, but I want to get over to Michael as quickly as I can so that we can do the recap. And our good friend Mike Reed from TradeStalker is going to visit with us today right here on this radio program. It's been a couple of weeks, so we look forward to talking to Mike, see how he's doing, what's new. I think he's got a trading camp coming up, or maybe he just finished one. But we'll find out. Now, when I say Mike's going to do the recap, if you're new to the program, you're going, well, what does that mean? Well, we have this little thing called a live trading room where we trade real money in front of real people in real time for 2 hours a day, every trading day, 9:30 a.m. to 11:30 a.m. Eastern. If you've never been to our live trading room, we invite you to come, take a free trial. It's absolutely free. You don't need a credit card. We don't need your mother's maiden name, your favorite pet, or the street you grew up on. Just your name, your email address. And frankly, the only reason we even want your email address so we can email you the link and the password so you can get into the trading room. Okay? All right. Now, Michael's going to go over every trade we took today in the live trading room. We've been doing this for quite a while. If you go out to our website, you can watch a year and a half of recap videos. Now, here's the deal. We don't just make a recap video on the days where we smoke them. No, the days where we get smoked, we make video recaps of those days too. Why? Why would we do that? Isn't that self-defeating? No, that's the truth about trading. Some days things don't go the way you planned. But you know what? You play through and you make it to play another day. So with that said, I'm going to get right on over here to this good word for the day. Then we'll take a quick look at the charts, and we'll go to Michael for the recap. Then we'll talk to our friend Mike the Trade Stalker, and after that we'll go to David Williams at Page Trader. Robin, the trading coach, who's normally with us, she's out of town. She's in the big city, New York, doing some coaching. She'll be back with us, I think, on Monday. Today's good word for the day comes from Proverbs. Great place to get your good word. Proverbs 11:25 to be exact. It says, "A generous man will prosper. He who refreshes others will himself be refreshed." Proverbs 11:25. Now let me ask you a question. Do you need some refreshing today? Now when we hear that word refreshing, we tend to think of refreshments. That's okay. If you want to correlate those two, that'll fit. That'll dovetail perfectly with what I'm going to share. So many people go around in life so overwhelmed, just tired, worn down, tore up from the floor up, just barely getting by. But you know, I think God has something better in store for us. I don't think that's God's best for us. I think He wants us to be more than conquerors. I think He wants us to prosper. I think He wants us to be refreshed. Again, a generous man will prosper. He who refreshes others will himself be refreshed. So here's the key. Be generous and refresh others. Relax, I'm not going to hit you up for any money. Is there someone, perhaps where you work, who's going through a rough time? Somebody that you could maybe be a blessing to? And I'm not talking money here. Maybe somebody you work with, maybe somebody that's on the PTA with you, or somebody you coach with, or somebody that's on the neighborhood association where you serve. You know they're going through a troubled time. Isn't there some way you might be a blessing to that person? Somehow you might be able to lighten their load. Maybe you know a family that's, going through a hard time. It could be financially. Can you help them out? Could you cook them a meal? Could you offer to take the kids to school? I mean, something. Could you? See, refreshing someone can be as simple as a smile or an encouraging word. Now, don't wait until you feel like doing it, because if you wait until you feel like doing it, you just might never do it. That day might not come. Do it, not because you feel like it, but do it because the Scripture tells us to do it. Do it because it blesses God. Today, friend, I want to encourage you to just look for somebody somewhere that you can be a blessing to. It can even be a stranger. And as you step out and refresh others, as you live a life of generosity, and by generosity, again, I mean giving of yourself, not of your finances, although it can be that. But as you give out of your resources of time, skill, ability, knowledge, concern, care, love. So there's no dollar signs attached to any of that, right? As you refresh others, as you live a life of generosity, you'll be refreshed and you'll experience God's blessing in your own life in return. That's your payback. And that's our good word for the day. Okay. The chart in front of me, S&P 500 E-mini futures, it's the hourly chart. If by chance you can't see the chart, go to CFRN.net. On the right-hand side of the page, click the great big microphone on the right-hand side. It'll take you to a page, gives you the instructions, then you can see the charts. You only have to go through that process once a month. Not a big deal. Okay? Get registered. You can see the charts every day and participate in the discussion. Ask questions, make comments, whatever you want to do. Now, if you cut up, we're going to make you sit in the back of the class. But we do want you to come on in. All right? So if you haven't done it yet, go to CFRN.net, right-hand side of the page, click the big microphone, come on in and join us. This is the hourly chart. Yesterday, as I was talking to David during the radio program, we were getting ready to put on a trade right here. I said, guys, stand by. I'm going to issue an official trade. I'm going to put it on the chart, and I'm going to send out a tweet, and blah, blah. And you know what? That thing just fell so quick. I ended up typing in the one that got away, because it went from here to here quickly. This is an hourly candle. We could break it down to a 1 minute chart and see exactly how many minutes it took. But those of you that were here on the radio program know that it moved fast. And now, could we have chased it? And because this kept falling, see, this is one of those rare instances where you could have chased it and dove onto the back of it, and you would have come out okay. But that reinforces a very bad habit, chasing a trade. So I'm glad we didn't chase it, because we would have gotten positive reinforcement from negative behavior. And that's never good. That'll just mess your head up. So we let that one go. But then price came down here, and I said, all right, guys, as we get to this zone, we expect price to bounce. And it did. Let me move this little circle so I can tell you how much it bounced. Once we hit the zone at 24.25, we bounced up to 27. So we got a 2-point bounce. Then we started a new candle. And then we pulled back down to the zone. And then we started to trade below the zone. And I said, all right, guys, watch out. I drew this line. All I did was look left. This is me demystifying the markets for you. I drew this horizontal line. I said, now we got to watch this. I go, if they get below that, then we'll be interested in trading this thing short. But there's an obstacle to this thing falling apart, and it's the swing low that was put in back on Tuesday. See if I go back. No, Sunday. This was Monday. Okay. This was Tuesday. Today's Wednesday. Let me go ahead and get my dividing line up here. There we go. All right. So what they do, they came in early. We talked about this almost every day last week. If you missed those shows, if you didn't hear those podcasts, some valuable information. We watched them, we tracked them coming in early, and they did it again. Couple ticks early, they came in, ran this thing, they tried to take it all the way back up to the zone. Notice here we never closed on the hourly below the zone. We spiked it. They came in early and ran it all the way up to 1635.75, which would be a point and a tick below the zone. So they tried, couldn't quite get there, but a nice move. Okay, whether you got long at the zone, or if you got long where they came in early, or if you got long as they were leaving the zone. Let's say you didn't get long until this candle here. It opened at 27.5. It closed at 35.75. That's 7-8 points. That's your daily goal times 2, times 3. Remember, we only look for a couple points a day. We end up getting more than that in the live trading room most days. But what we teach is that however much money it is that you want to make in the markets, you can do it off the back of just 2 points a day. Not guaranteeing you can make money in the markets. I'm just saying that once you learn how to confidently take a couple points a day out of the market, that couple of points, people ask me, well, how big is a 2-point paycheck? It's as big as you want it to be, based upon your ability to trade multiple contracts. And I'm not just talking about your ability because you got some money in the bank. Okay, that does, just because you have money in an account doesn't mean you have the ability to trade multiple contracts. Experience is what gives you the ability to trade multiple contracts. Money is the smallest part of the equation. Oh, that's another discussion. So they ran up real nice, couldn't quite get to the zone. Okay, that's what we always expect. We expect price to go from zone to zone, back to the zone, back to the zone. Okay, almost made it. Comes back, hits the zone, puts in another bounce. Okay, from the zone here, we bounce up to 1630.75, a 5-point bounce. Once again, your entire daily goal times 2 right there in that little move and that little hourly candle. But price just can't see the market has now created a new obstacle for itself right there. 1632. That's why I sent out a tweet last night. It says if we can get back over 32, we'll trade it long. We couldn't. It became the iron wall. And in that same tweet, I said if they can't do it on the upside, we'll take it on the downside. 1619. Consider being short below 1619. When price couldn't break above 32, it came back to the zone. It thought about it for 1, 2, 3, 4, 5 hours, and it said, you know what? We just don't have the resources to push this thing higher. Let's take a break. So they rolled over. They fell through 1619, and we've now got a swing low of 1610.5. So we'll call this an 8-point move so far. We have a weekly trading zone below us. Partners know exactly where it is, and I got to tell you, that's where we're headed. Okay, we're headed down to the next zone below us. Already an 8-point move, already 4 times your daily goal. All right, let's go look at the Dow. We also put out a tweet on the Dow. We said if we can break up above this zone on the tweet, we'll trade it long. If we can't break up above this zone, we're going to trade it short. And from 15,095, we've traded all the way down to 14,991. Basically, we've got a 100-point move in the Dow. The exact numbers on the tweet for the Dow were, consider being short below 15,075. And so the tweet was right here. 15075. So right there, that's where you wanted to get short based on the tweet. And again, you've now got a couple days pay out of that move. If you traded it all the way down, maybe you didn't. Maybe you just took the equivalent of your couple points and you're done for the day. And you're not worried about the fact that it's headed to the next zone, and that once it gets there, it may find support and head the other way. That's not even, you're not even concerned about that because you've already got your daily goal. And that's the only thing you're really concerned about. Okay? Show you one last thing, and then I'll give the mic to Mike. Let me make all this go away. If I can. There we go. Change this chart to soybeans. Now, we already did really well in soybeans earlier this week. Okay? In fact, I'm going to show you those in just a second. Last night, soybeans said to consider, the tweet said, consider being long about 1534. 1534. Okay, so there's 1534. The swing, oh, that's about a crooked 1534. There we go. Swing high, 1548. So from 35 to 48, this is a 13-cent move in soybeans. Okay, that's equivalent to 13 points in the S&P. Each penny in soybeans pays $50. Each penny in soybeans pays $50. Each point in the S&P pays $50. Okay, so 13 times 50, whatever that is, that's what that is. Now, we had a soybean tweet on the Globex Open Sunday night. It gave us an 11-cent move, a 13-cent move, and a 9-cent move. Also on the Globex Open Sunday night, we had a Dow tweet, which I just showed you today's move on the downside, but on the upside, we had a 19-point move, a 50-point move, a 67-point move, a 97-point move, and there was also a 150-point move that didn't make it into this chart. Okay, that's on the Dow. Got just one more chart to show you. It is the S&P. I showed you the move just now on the S&P to the downside, but the Globex tweet Sunday night gave us 3 points to the upside, 6 points, 4 points, 7 points, 6 points. Now we got the move down today. All in all, it's been a great week. The tweets have been incredibly kind to us. We've done well in the live trading room. Life is good. God is on the throne. And it's now time for the recap with Michael.
All right.
Come on down.
Excellent. Excellent. Let me just grab these charts and I will be happy.
I mean, this week, this is why people become traders, right? This is a great week, man. Just so much opportunity. It's incredible.
Tons of opportunity. I look forward to it every day.
Giddy up.
All right, so you guys should be looking at my charts right now. Yes. Yes.
Yes, and I'm going to mute my mic for a bit, okay?
All right, okay. Speaking of your mic, let's mute Mike's mic too. Just because I just heard him come in. All right, he's already muted himself. All right. Let me start the recording. I'll bring up my spreadsheet, and we will get rolling here. Here we are. All right, good afternoon, everyone. Today is the 5th day of June, 2013. Let's go over the results from the live trading room first, okay? It was kind of an odd day today where I only had results in 2 markets. I actually traded 4 markets, but for the longest time I was break even in everything but soybeans. We had 30 ticks profit in soybeans and an 8 tick loss on the Russell. That's what we had on the morning. All right, it took us 39 minutes and 7 trades to get our 2 points. We were at $150 per contract when we closed the trade out. That got us our 2 points. All right, we actually had gained 3 cents on a soybean trade. So far on the month, we are up $947.50 in the 3 trading days that we've had so far in June. Last month, we were up $6,292.50. So far this month, we are on pace to better that, hopefully. That's a tough mark to beat. That's per contract in the live trading room. Now, if you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. And in the free trial, you get access to everything that you see. You'll get access to our live trading room. You'll be able to sit in there for 5 business days with us and see us trade, learn how to trade, learn how to do what we do, basically. Now, the chances of you learning how to do it in 5 business days, you're probably not going to learn how to do it in 5 business days. Some people pick up on it really quick, but chances are it's going to be, the first 2 days is going to be a big blur to you because there's lots of colors and I'm constantly moving charts around and looking for markets to trade in. But once you know what we're doing, once you learn what we're doing, and it's really pretty straightforward. It's really just a couple of things that I do over and over and over and over and over again. It slows right down, and you actually don't even need to be in the live trading room anymore if you don't want to. But that said, cfrn.net/apply to take the free trial. Okay. If you were on the free trial yesterday, you should have gotten a detailed email telling you how to become a partner with us. Okay, it should be in your inbox from yesterday afternoon. If you did not get the email and you want to know how to become a partner, send us a quick email at support@cfrn.net and we'll be sure you get the information. There's a partners meeting tomorrow night, partners only, tomorrow night, 9 p.m. Eastern Time. Okay, you must be a partner to get into that meeting. All right, let's get into the markets. Now, I don't have much to say about any of the markets other than soybeans because we didn't make money on any markets. We got break-even trades everywhere. We had 2 break-even trades here on crude oil this morning. We had a break-even trade here and a break-even trade here. Now, every break-even trade was a trade that went 4 ticks at some point. So, the fact that they're break-even doesn't mean that they didn't have a chance or that they it means that they all went to plus 4 ticks at some point. And then I moved my stop to break even, and then it came back and took me out at break even. But we had these 2 trades right here on crude is all we had. This was a close down below the trend line. We went short. It went 4 ticks. I moved my stop to break even, and it took me out. This was a close down below the trend line and off the BBC, but the cycle was blue. So you needed to close below the trend line, right? I shorted there, and I got out over here at break even. We missed this trade. We missed this trade. We missed this trade. There was no trade there. No trade there. We missed this trade and this trade. And this trade, this trade, this trade, and this trade. You're going to hear me say that a lot because I missed a ton of trades this morning. It's not that I meant to miss the trades. It's that I was, either going over some points of trading or showing some things that I had promised people that I would go over in the live trading room. It's also a training room. It's not just trading. It's training as well. So, I'm trading as much as I can, but I ended up missing a whole bunch of trades this morning. You can see right there on crude, I missed 4 winners right in a row right there. It changed directions. There was a long trade in here that I missed. There was another long trade in here that I missed. Changed directions again. There was a short trade right here that I missed. And that was the end of the morning session. Right now you have a bullish cross and bullish divergence. You would look for a pullback down to the BBC. And if it doesn't hit the BBC, you would look for an up close above this trend line. That's what you would look for. And that, my friends, was crude oil today. All right. Let's jump to the Russell. I did take a trade on the Russell. Jerry, okay, I didn't see it. It was here. When I have a moment, you had to short the beans up here. Small, but I'm watching the trade go to a 2-cent range. When you can, tell me. Okay. Well, let me jump into the, I want to do the beans last. Okay. Let me look at it really quick, though, and tell you, give you my thought on it. Oh, the beans are right here. Yeah, the beans are due to pull back right now. Okay, they're due to have a pull back right now. So that's my thought on the beans. Let's see, on the crude oil, an up close on the current bar would be a long trade, for those of you guys who are watching it. All right, this is the Russell. We only took, I know the Russell looks a little different right now. Where is it? This was our trade in here. I took this trade right here on the Russell. Let's see, the Russell. Actually, I took more than that. There we go. Okay, I took a break-even trade here on the Russell. It was an up close above the trend line. I got long in there. Came back, took me out of break-even. I got short over here, I think. And it came back and got me out of break-even. Actually, it was a long. I got long in there. Came back and got me out of break-even. I missed all these nice trades. This one, this one, this one. In here, there was nothing because we didn't have any divergence. On the way back up in here, I missed all these trades. And I took another short trade over here I got to break even on, and I took another short trade in here that I stopped out on. Stopped me out pretty much to the tick, and then it went down. All right, that was the Russell. I know the Russell looks a little different right now, but it looks different. It looks different because I have taken off the MA1 and the BBC, and I have the sensitivity on the flow set to 6. Because this was something that one of the partners that has been doing really well with the flow paint bars was using, or has been using. All right, that's it on the Russell. Okay, those were all the trades that I took. There was plenty of opportunity on the Russell. I just didn't take it all. On gold, another odd thing. On gold and crude oil, I don't have anything today. Gold, I didn't even take a trade, I don't think. Nope. I highlighted some areas, but I didn't take a trade. I missed a whole bunch of them. There's a long trade here, a long trade here, a long trade here, a short trade here, a short trade here. There's just a ton of opportunity, but I was working in the soybeans quite a bit today, and I was also trying to go over some of the finer points this morning about when to anticipate the end of a trend and things like that. Okay, if you're interested in that, well, take the free trial. All right, I'm going to slide gold off because I didn't have any trades there. I didn't have any. I didn't take any trades on the NQ. I highlighted a couple. There was one. There was one. That one lost. That one gave about a point. There were a ton of trades in here on the NQ on the way down. There's always a bunch of trades on the NQ. But I didn't trade it. Okay. We had bullish divergence and up close above the trend line. There was a long trade in there. A short trade right here. Divergence switch down here on the bottom. So there were long trades right in here. Right in here. Divergence switched again. Short trades right in here. Let's see. Nothing in there. Nothing in there. That's it. Right in here, some short opportunities. In here, some short opportunities. Over here, some long opportunities. In here, some long opportunities. Now I'm just looking at the divergences down here, and the crosses and test of the BBC with the up close, all that sort of stuff. It's really pretty straightforward. And once you've taken the trial and you become a partner and watch it for a little while, the stuff just jumps off the charts at you. At least it does for me. And a bunch of other people. It's not just me. Copper. Did I trade copper today? I took one trade in copper and I took a break even on it. It was over here. All right. I got long on the up close above the trend line right here on the copper. And I had moved my stop to break even once it gave me about 5 or 6 ticks profit in the trade, and it came back and took me out. There were other opportunities in here, but again, I did not take them. Now, let's look at the ES quickly. Now, I know Mike Reed's in the house, so I want to be quick here. That's why I'm being so quick. On the ES, there was a long trade here that didn't work out, a short trade here that did, a short trade here that did, a short trade here that only went a few ticks before it turned around. Once it all turned around, let's see, it's headed back up into the weekly trading zone, but there was a long trade right here, and it got really choppy in there. Nasty. And let's see, that's after the morning session. The morning session ended. Now, I'll get into the soybeans, because the soybeans is where I took most of my trades this morning and where we made the money. Our very first soybean trade was right here. We ended up taking a break even on the first one, and we followed it up with another trade right here. This is where we got our 2 points, and I made 12 ticks on that trade. Took another one right here. The trend was continuing here. We took another long trade right there, and I think we got 1 tick profit on that. We took a short trade over here. I think we got 1 tick profit on that. Another long trade over here. We got another 12 ticks profit on that, I think. I'm pretty sure 12 or 14 ticks profit, something like that. And one more long trade here, and we got a couple of ticks profit on that. All right. Now, right now, a few minutes ago, one of the partners had asked me what I thought about soybeans, and I said I think it's due for a pullback when it was right here. I said you should have a pullback right now. What I'm looking at on the soybeans right now is you have bearish divergence. You have a trend line like that. Looking left, it needs to break this level right here, 1539. If it breaks that level, it should pretty quickly go down to this level at 35.5. Okay, all right, Jerry. That's what I'm looking at on the soybeans. Now, continuing with the look left, we had a trend line like this. It broke that trend line, and now it's put it in like this. Okay, from a bigger perspective, we're in chop. Okay, because we have lower highs and higher lows. So from a larger perspective, it's choppy right here. It needs to break this level right here. That level. It needs to get down below there. If you hold on to the trade and it successfully gets down below that level, I mean a close below that level, not a wick, then it should go right down to this level over here. Okay, that's what I would anticipate. All right, and that's it. That's what I got. All right, if you guys have not taken the free trial, go to www.cfrn.net/apply. Sign up for the free trial. If you have taken the free trial and you want to become a partner, send us a quick email at support@cfrn.net, and we will send all the information you need out to you. Okay. If you're on the free trial right now and you want that information, again, just send us a quick email at support@cfrn.net, or you can call me at 949-423-6464. All right. With that, I am going to stop my recording so we can head out to Indiana. There. All right, recording is done.
Indiana wants me, but I can't go back there.
Hey, Mike.
It's a beautiful day in Indiana.
Oh, I forgot to queue up that sound file. Oh, my goodness. Recorded it yesterday, and I don't have it queued up for later. Hey, Mike, how are you?
I'm doing great. How you doing?
Good,
Yes.
buddy, good.
Hey, Mike.
It's been a couple weeks. Hey, did you already do your trading camp, or is that coming up next week?
We start Sunday. Sunday, yeah.
So you got any seats left?
Well, there is one.
Well, tell the folks about it. Tell them what the trading camp's all about. Somebody might be interested.
Well, in a nutshell, we're gonna go through trading support and resistance, finding support and resistance, the way I do it, my methods, and then basically how to trade the support and resistance areas. So everything about support and resistance and how to trade it, how I trade the numbers. That's that, and along with the I'm going to go through the bigger picture stuff that I do with my spreadsheet for more bigger picture trades, swing trades, those types of things. So swing trades, and then stuff with everything about trading support and resistance on an intraday basis, and then bigger picture also.
Mike,
Okay.
you're so low-key, man. Most people, given that opportunity, would just go to town hawking that thing about how good they are and how accurate and how it stood the test of time. And you've been doing this like 78 years now. And, oh, wait, no, it's 27 years?
That's 30 years.
30 years. There you go. See, I got something out of you. No, I really appreciate that about you, your humble nature. Given the mic here, promote yourself. You know, you got one seat left to fill. Fill it, dude. And you just, it's really, I'm just telling you, man, you got so much integrity. And it's one of the things I just love about you is that you just don't blow smoke up anybody's chimney, you know. And you are who you are. Take me as I am, like it or leave it. And so, good for you, man. You get our 3 dings of the day. I reserve that for something very special, and you got it. You're the winner.
All right. I'm gonna put that on the calendar, Dwayne.
Okay. All right, put it on the calendar. I got 3 dings.
Three ding days from Dwayne.
I got 3 dings on the show.
Yeah.
So, speaking of support and resistance, we're coming up on 1607, 1608. It's a weekly trading zone for us. I just put it on the chart. I've not shown it to the public prior to just now because, well, we try to be a little mysterious. No, I'm just kidding. We do have partners that actually it's part of what they get. And so I try to wait until they come into play before I put them out there on the radio show. But is 0708 at all important to you, Mike?
1608. Yep, that's one of my numbers down there. That's actually, there's on my chart as we come across here, there's lines from in the past that are showing up, horizontal lines, and right in that area, Dwayne, 08 is the area that I'm looking at for the support. So we're right in there. And
now let me say this to the audience. Audience, hear me out. Remember, I keep telling you that don't let people mystify these markets for you and tell you there's some kind of big old secret. No, you just got to learn how to read the charts. That's all. It doesn't have to be a mystery. It'll be a mystery until you learn how to do it. But here I am. I come up with the number, and here's Mike in Indiana. We haven't talked in, I don't know, a week, 2 weeks, and boom, here he is on the show, got the same number. That's because the only secret there is that we both have invested time and energy in learning how to read a chart. And quite frankly, I invested a lot of time in learning from Mike how to read a chart. Okay? A lot of what you see me do on this radio program came from what I learned from Mike. I always believe in giving credit where credit is due. And so I've done a lot of things on my own, and I have learned some things from other places, but a lot of the foundational work came from Mike. And so, Mike, I think I try to thank you every day that you come on the radio show, but I'm going to thank you again.
It's awful kind of you, Dwayne. I appreciate that.
Well, it's the truth.
Glad they've been of some help along the way. So, no. You pick up, you know, your spots are dead on. I wouldn't want to, you know, go against them too much here. But yeah, we both have the same area down here that could stop the bleeding. It's been steady trend down day. The bounces have been about 4 to 5 points, and just, you know, they've been kind of not enthusiastic bounces at all, just kind of wimpy bounce that doesn't stick, and they just grind it out to the downside. And those are the kind of harder to turn those around. But
are we trading down for any particular reason? Was there any news that sent the market down, or is it just there were some numbers out at 10 a.m., but I'm not sure that's what. I mean, they turned down around that time, but I'm not sure that that's, you know, was supposed to result in a. The Dow back below 15,000 for the first time since May 7th.
Okay, yeah. Yeah, and they washed away the Tuesday update thing yesterday. And
oh, that's right. How many Tuesdays in a row was it?
I think they had 20 consecutive, and I think it dated back to the 1950s or 1940s, something like that.
20
wild.
consecutive Tuesdays in a row, guys. We'd been talking about what a meaningless statistic that was, and now the meaningless streak is broken. Here's a daily, Mike, of the S&P. Now, I had written back some days ago, or a couple weeks ago, I'd written trap as we got into this area right up here. And then we got that little spike there, and I was like,
That's 85.
now we've popped back into this price channel. The one that I just can't seem to bring myself to get rid of, because we keep popping back into it, and this thing goes all the way back to November of last year.
Yeah. The big area I just saw go by. For me, anyway.
Right there?
No, you'd have to go up a ways. I got just above, just around 1,600 or just below. What was on your chart there?
1,600. Okay, let me get to it.
Let's see here. Yeah, right there. Let's see. Stop there, Dwayne. Yeah, go back and stop and go to your left. Straight across to the left and see those little tops there.
Right
that are sticking
here.
Out. No, go down.
Right here?
Down. No, I'm sorry. Move on down and to your left.
Down
No, I'm sorry.
Well, it's because there's a little bit of a delay
Right there
between when I move it and you see it.
I gotcha.
Yeah.
Okay. Right there, drop your arrow down about, keep going. A little more now, right there.
Right there?
Exactly. Go to the, see, go to the left, that low. Isn't that right around the, that's a key spot if they could go down that far. Before that was a breakout area before.
Let me do this. I'm going to use, guys, my horizontal tool, but it's not a weekly trading zone, but I'm going to use my horizontal tool just to be able to put a horizontal line on this chart without having to. Okay. So that's what you're looking at. So that would break all the way through this channel.
Yeah, that would be if they really get hit, like they open it really gets open, they open up and.
Well, see now the key area that I'm watching, Mike, is actually across these bottoms, right here. So I'm watching these bottoms. You're watching the tops. Maybe you can tell us the difference.
Well, the top was kind of like a breakout area, and that's for people that, and it was tested twice, and rejected twice, and then finally busted. It went through, and that kind of like was a transition, the way I see it, from potential double top there to breakout area. So we look for a return to the breakout area. for support. That would be just, as I look at it again, there's another spot even higher up than that, Dwayne. That's a little bit better, right around the...
Right there?
Yeah, there you go, That has the same thing. If you look to the right, they went back up there again and came back down. Yeah, came back down, one red bar and then a green bar up, and then they went through it, through that level.
Yeah, let me show guys. Here's what he's talking about. It came up, it hit it, pulled back, and look where it pulled back to. It pulled back to that little trend line that I had drawn across these bottoms on the way up, and then boom, he popped right back through it. And that's 2 days later is when we popped out of the top of that channel and ran into that area that I had labeled a potential trap. So now let's talk about people that might be trapped up here, Michael. How much pain? How many of them are there, and how much pain are they in?
Yeah, I don't think a lot, because they didn't stay up there long. They were just they ran up and they came right back down again. So I think the 75 area or just below is probably that we'd be under pressure from there on up. I mean, the ones that are really underwater are from the 85 down to 75 area. Yeah.
Okay.
Left a big tail. They didn't, because they didn't stay there long. They ran up. Someone bought the high up there.
Yeah.
They traded them.
They did.
And
yep.
Right back down again. So they didn't stay up there very long. And then they bounced back up again and didn't stay. And that trapped a second little number of people. So
now, Mike, do you think this is simply a little pullback in the ongoing crazy bull move, or is it something more important?
Let's see. I think that I actually had a hard time seeing this getting back up to 75, 85 and staying up there. So,
okay.
I mean, a double top might be possible, but I think I want to see how they handle. They can have a decent counter trend move against this. See, from 85 down to where we're at now, it's 75 points. That's a pretty good drop, but you know, they could retrace a decent amount of that and still find resistance on the way up. As there's more damage done on this move for sure. If they do get down around 1600, 1598, there was a breakout there, that's something to watch. That's probably one of the numbers we drew on the chart there, not for sure, but that's where a good counter trend move back up could come from.
Michael, you still with us?
I am.
What are your thoughts on this, buddy?
I
know your expertise lies in the shorter time frames, but I know
that's an hourly chart.
You got to have
Yeah.
an hourly chart. That's like a vacation for Michael. I mean, it
is. I'd be waiting outside for my statement.
Period of time. Do you have any thoughts at all?
Well, just looking at the levels that have been broken, I'd need to see farther left to really have you know what, why don't I look at my hourly chart? Oh, I don't have a YM hourly chart up. I don't have a YM chart up at all. Can you scroll a little bit farther left? Show me some...
I can. Let me drop this other level right on top right here.
Okay.
I've got to reconfigure my charts. I don't have enough real estate for... I just got to juggle some things around, not now during the show. So, guys, last night on the tweet, we had said if we broke through this zone, we gave the exact number to get short on. Took us to the next zone, but look at what's happened. We've already broken. What's the next one down? That was 15, 10, 15. We only got one more to go. It's way down there. I'm not going to put it on right yet, but it's a ways down. So, okay, Mike, you asked me to scroll left. Do you want me to go to a different time frame? Now, this is the Dow. Okay.
Yeah, I know. That's why I was just looking for a bottom on the other side, some area of support. And yeah, we're going back a long way there.
Mm-hmm.
Yeah, there's a lot of empty space.
I haven't even tried this out. I upgraded to the new. I ran the new demo version and I upgraded it, and I should be able to do the continuous contract now.
You should.
I haven't even tried it. At YM.
It's showing up, so.
Now let's see if it takes. It took. Okay.
Okay. Excellent. Well, it's still not giving us the information that I was looking for.
Oh,
it
yeah,
just looks to me like there's a whole bunch
go.
of empty space down there. There we go. That's the next spot down, all the way down there at 15,010.
Well, we already broke through that today.
All right. Then we...
See, we're way over here at 14.
14,798. Okay, then we need to go farther left.
Mm-hmm.
Farther left.
There we go.
There we go.
Now we're cooking.
Now we're talking. All right, now we need to go right a little bit.
Yeah.
Right there.
Yeah, so it looks like right down, right there. 965, right in that area, and below that, I wouldn't consider that wick at 910 anything. I would look down there where you are, right there at
right here.
14,880.
Mm-hmm.
Yeah, right down there. That's what I would anticipate if you were doing this on an hourly time frame. That's what I would be looking for down there.
Okay, and if I just turn that
if you extend that thing
right.
There you go.
Go.
Then that ought to...
Walk it, walk it, walk it, walk it, walk it, and there it is.
Yep, that's what I would be looking for, right down there.
Now, I'm just gonna tell you guys that the next zone down on the Dow, just to give you a rough idea, y'all ready for this? It's almost 400 points lower than where we are right now.
Wow, that's significant.
Which is the equivalent to 40 points in the S&P. So does that mean there's the potential for this thing to get ugly by the close tomorrow? Yeah, there's always that potential. And we have important econ news tomorrow. What do we have? Payroll, unemployment, something.
Hang on, I'll tell you.
Oh no, today's only Wednesday. We've got Thursday's numbers and Friday's numbers. Yeah.
Yeah.
This could get rocky. This could get rocky, guys.
A couple of days worth of...
Oh, Mike, I know you're going to have to run. Let me grab David real quick. I know he's sitting there going, how come they don't bring me in?
Okay, it'll have to be quick. That's okay.
We'll make it really quick. All right? Don't touch your radio dial, guys. We'll be right back. And...
Believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-66928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
Good morning, Dwayne.
David, good morning. Welcome to the show. We have Mr. Mike Reed here with us.
Good morning, Mike. How are you doing?
Hi, David. I'm doing fine. How are you doing?
I'm doing good. Nice to hear from you.
Yeah, nice to hear from you.
Yeah.
He's got to run, but I wanted to get you in here so you could at least say hi. And we've been talking about, the potential for much more on the downside. Any questions you have for Mike, David, before he has to go?
Well, first of all, just how the heck are you? And
well,
just for starters.
I'm doing fine, David. Hanging in there.
That's good.
Wonderful day in Fort Wayne. It's good. Oh, really? The mid-70s, nice and sunny, little breeze, fresh grass mowed, and here I am trading the markets. Couldn't be better.
No, that's beautiful. You have, I don't know, but I'm guessing that you have a fairly sizable yard, or the space, the overall space of your...
Yeah.
He has a pond, David. The man has a
Okay.
pond.
Well, that still doesn't beat the world's largest city park.
That's
You're
right.
right.
Yes, that's
Exactly.
true.
I can't. Yeah.
You can't compete with that.
No, I ain't gonna try.
But no, that's beautiful. That is nice, and the weather is beautiful there. And what does your summer get up to out there?
Well, when we get really hot, it gets in the mid-90s, but
Okay, and that's with the high humidity and the whole shoot and match, right?
yeah, it gets kind of miserable if it gets in the 90s. But low 80s is great. That's pretty much the summertime. There can be dry periods or dry summer or a rainy summer, but normally the temperatures aren't too bad. We get the really big heat waves every now and then, but anyways, yeah, we get through them.
Well, that's great.
All 4 seasons. So
Yeah, well, we're starting to get very hot here in Las Vegas. We had 104 or so yesterday. We will see next week probably 110. And so summer's here. It's the game is on, and this is the one season that is difficult for me to get through. The heat is it's very hard on you, and it's difficult. And a lot of women don't mind it because women are sort of colder, I guess, than men are in a certain sense, in that the heat feels good to them. But it is oppressive out here, just very similar to when it's very humid in a place and it's only 80 degrees out, but the humidity just can flatten you, So
yeah,
I'm not sure which one's better or worse.
yeah,
Probably the dry heat is probably better.
yeah. Well, we go through all 4 seasons, so we don't get dry heat or cold, wet for any of them for all that long. So. Yeah.
Well, that's nice. Well, it's great to talk with you, Mike. I will. Hopefully, we'll talk again soon.
Yeah,
Maybe
it'll be
Go ahead.
after this next week. I have to be gone for a week, but I'll be back after that. So.
Okay. Well, nice to talk with you.
Nice
Very
to talk
hear
to you,
from
David.
Okay, buddy.
Michael, Dwayne, thanks again for having me. Appreciate it.
All right, Mike.
Michael, always a pleasure, man. Good luck with the trading camp next week. And I know you'll be tied up then, but we'll see you. If we don't see you again on Friday, you're welcome to come Friday if you can make it. We'll see you week after next.
Okay. Thanks, Dwayne. Thanks again.
See you
Take care, guys. Have a good day.
All right, man. Take care.
Bye-bye.
Hello, David.
Good morning, Dwayne and Michael. How are you?
Good morning, David. Doing well, thanks.
Good. Well,
How are you?
I'm good. The markets are moving, and we're getting some. It's nice to see. The markets are what we do, all of us, and it's nice to see movement, telling us that the gosh darn thing is going. As opposed to something really quiet where you have no directionality, no volatility, and all that. So we're having a pretty good. There's a number of markets that have moved pretty well today, and we'll talk about them as we get into it here. And is Robin with us today or no?
No, sir. She's in New York City. She'll be back Monday.
Oh, okay. Yeah, she travels quite a bit.
She does. She gets around.
Yeah, she does. So, Dwayne, anything interesting? I was not on early today. Anything interesting in the news that you wanted to cover, or?
Because Mike was with us, I didn't have a chance to get to my headlines. Let me whip out my headline machine and see what it was I was going to talk about, and we'll see if there's anything here that we might want to dive into real quick. Oh, this is pretty big, guys. Japanese, I'm going to go ahead and just read the first paragraph of this. The Japanese government could light a fire under the markets again tonight. Japan's Prime Minister Shinzo Abe and Myanmar's President, oh, that's just them making a toast. Okay, tonight, Japanese, this would be our tonight, I am assuming it's there tomorrow morning. Japanese Prime Minister Shinzo Abe will unveil the much-awaited third arrow of the experimental Abenomics program of economic stimulus that has captured the imagination of observers around the world. The success of this experiment depends in its entirety on the details and implementation of the third component of the Japanese stimulus package. The first two arrows of Abenomics have already been launched and are fully in play. So this is their version of what we did here in the U.S. Do you know, I don't really know the fundamentals of this thing and what they did exactly, David, do you?
No, I don't, and it's not, it's probably not completely dissimilar, but that economy and the way things work over there, if I had to name a place where things were different, I would name Japan. So, you know, where things operate differently than they do here.
Yeah. So if you're trading over on the overnight guys on Globex, no matter what you're trading, if this is really big news coming out of Japan, I mean, it could have an effect on all markets, positive or negative. So in fact, if I bring up my, where is it? Let's go over here and go to the news, and we'll see exactly what time that thing's going to come out. Let's see what other news. Oh, Amazon is moving into the grocery business. This is kind of big news. Amazon,
That's
as
big.
you know, I'm a big fan of Amazon and Jeff Bezos. Now that Steve Jobs is gone, other than our president, Jeff Bezos might be the smartest man on the planet. I'm not sure. He hasn't won any.
Why is our president so smart? What's he doing?
That's
so
that one
brilliant?
guy. That one guy that made that soundbite. They kept playing over and over and over about how our president is the smartest man that ever lived. I forget who said it, but it was one of those sound bites that just you couldn't get away from it. Amazon Incorporated is planning to roll out a major rollout of an online grocery business that it has been quietly developing for years, targeting one of the largest retail sectors yet to be upended by e-commerce. While food is a low-margin business, Amazon could outperform similar online grocery services by delivering orders for higher-margin items like electronics at the same time they bring you your groceries. One of the people familiar with Amazon Fresh's expansion plans, oh, that's what it's called, Amazon Fresh, said new warehouses will have refrigerated areas for food and also space to store up to 1 million general merchandise products. The company has been testing Amazon Fresh in its hometown of Seattle for the last 5 years, delivering fresh produce such as eggs, strawberries, and meat with its own fleet of trucks. David, I really might not ever have to leave my house. I may never have to leave the compound again. David.
Thank you.
Yeah,
I was hoping you were going to say that to me.
Oh, I'm sorry. I'm sorry. I'm so sorry. My mic slipped off, and that was an accident. I was saying that might be a good thing for you, that you don't have to leave the compound.
Yeah.
You left yesterday, though. I know that.
Did I?
Yeah. Well, I got a little text.
Oh, that's right. I did. Wasn't that was a great picture, huh? And Bert,
Yeah,
Bert's very observant. He goes, "Hey, your little girl is eating a pizza with the works on it. That's very adventurous." Because I guess most kids just want cheese or something, but she eats everything. She'll even eat hot chili peppers. She's very adventurous when it comes to food. I can bring out the most bizarre thing. I'll go, "Hey, honey, you want to try this?" Yeah. You know, she just, what a great little eater. Now, her brother, he's the picky one, you know. Okay, Tim, I see you there in chat, and for some reason I can't seem to transfer.
I have it. I have it.
Oh, you already
I
have
got
it.
it.
That's why I can't
Yep.
transfer it. Okay, let's go find out when this Japan news is coming out. I'm thinking now that this is the one I can't. Oh, here we go. Okay, today's Wednesday, and it's supposed to be tonight, so we're looking for Japan. Japan, right here, foreign bonds, 30-year auction. Doesn't look like it's tonight. Okay, let's look to tomorrow. I don't see this. So, all right, I'll investigate that a little further, guys. But so that's big news. Japan's third arrow. Amazon is going to sell loaf bread and milk, deliver it right to your door, along with your new MP3 player. That's how they can afford to do it, because they make a lot of money on the MP3 player, not so much on the loaf of bread and the milk. Here's a good one. The U.S. is going to sell. Oh, and Walmart came out with their own news that said they're going to compete. They're going to do the deal too. U.S. is going to sell another 30 million GM shares. The U.S. government is taking advantage of the recent run-up in General Motors to sell off another 30 million shares in the auto giant that it acquired during the bailout. It's going to sell those shares plus another 20 million, which are owned by a United Auto Workers Retiree Healthcare Trust. It was unclear how the shares would be priced. GM shares were down 7 cents in pre-market trading on Wednesday, but they hit $35.49 on Tuesday. The public offering will help accelerate the government's exit from owning GM stock, which it got in exchange for a $49 billion bailout in 2008 and 2009. So that's kind of big news. That's going to look good for the president, right?
Well, perhaps.
Yeah, perhaps. I don't know. So I only had those 3 headlines. So other than that, David, no, I don't have any other big news. Any guys in the audience, you got any news you want to talk about? Any headlines, something you might have read or saw somewhere? What's the Japanese term for Keynesian economics? I think it's Abenomics. I think it's Abenomics, quite honestly. See, I shot another question at you when you're done with the review. Let me try to find quick question when you have a moment. I have some long-term stuff telling me to short the beans up here. I did small, but I'm watching the trade go between a 2-cent range. When you can, will you mention how I might hold this, or is it all about money stops? Well, you know what? We're going to go to the beans here in a few minutes once we work our way through the other markets. So we'll be sure to hit that for you.
Absolutely.
And Jessica, I'll also at some point during the show, it might be after the show, I'll stick around and I'll go over some of the zone-to-zone trade setups with you. So, other than that, David, Michael, are you still with us?
I am.
If you could chat with David for just 2 minutes, I just had a call come in that I think I need to return. It'll take me 2 minutes, and I'll be right back. But you guys have fun, okay?
All right. Oh, we always do.
No
We
fighting.
will have fun.
All right.
Yes.
Oh, no, there would be no fighting. Michael Bork.
Yes.
From
David Williams.
Yes, Michael Bork from where are you from?
Massachusetts.
Massachusetts.
Yes.
David Williams from Las Vegas. We're going to entertain the listeners today.
All right.
I'll tell you what.
Shall I take the charts? And
you can do whatever you'd like.
All right. Let me do that. If only life were that simple.
If life was that simple, then there would be no opportunities for the gains in the market. There you go.
That's right. There. All right. So these are my charts. Now, what market would you like to look at, David? Is there anything in particular you would like to look at?
I'd like to look at, actually, the market for physical libraries. I'd like to buy physical library futures. I think they're going up.
Physical library futures. Let me see if I have that.
Do you have that?
If there is a market for that.
My question, I actually woke up this morning, and the first thing that popped into my mind was, are libraries going to go away? And the reason I asked that question is because the previous evening, I watched an old Twilight Zone with Burgess Meredith, where he was a banker in a bank who just loved to read, and he would speak to his customers while they're there and shortchange them by accident because he had a book in his hand. He just adored reading. And they almost fired him a couple of times for it. And what he would do during his lunch period at the bank is he would sneak into the big vault downstairs where they kept all the money and everything else. It was all locked up. But he would sneak down there just to read his books without any interruption at all. And he just loved to read. One day he was down in that vault reading his books and just loving what he was doing, and a huge explosion took place, and he didn't realize what that explosion was until he exited the vault to open air. In other words, the bank had been completely blown away, as was everything else. A nuclear holocaust had occurred, a bomb had gone off, and the entire city was flattened. And so, of course, this is a life-changing event. He stumbled through the rubble and finally found himself a little area that he could sleep in that was near a blown-up general store that had food, so he had some provisions and things that he could go on for several years. And then he continued searching around desperately and suddenly ran into a public library that had been blown up. And all these books were all scattered all over the place. And so he gathered all the books up and he stacked them up into years of reading. So he said, this is year number 1, this is year. So he knew he could read forever. He had many, many, many years out into the future that he could read all these books. And then while he was doing all that, he stumbled and his thick glasses fell off and they broke. And so the Twilight Zone ends with a man that's standing amidst rubble. He wanted to spend the rest of his life just reading. That's all he really ever wanted to do. It looked like life gave him that opportunity, and then his glasses broke. And they were thick glasses, and he couldn't see. So having seen that, right before I went to bed, I woke up and I thought to myself, our public library is going to go away. It just popped in my head because of the internet and cloud and everything else where everything will get stored. Will we be talking about books like we talk about other bygone things, that everything's online? You can print them out, but nothing's printed anymore. Paper's too scarce and all that.
I doubt it. There's,
You really do doubt it?
I really do. When was the last time you've gone to the library? I mean,
I haven't been to the library in years, but I have seen many other things go away because of the internet. So
yeah, well, the library, when you have kids, young kids like I do, the library is really comes in handy, and they do a lot of things at the library that you wouldn't normally think of. Like they have animal shows and things like that. They have if you're a member at the library, you can transfer books from other libraries. If there's a book you wanted to read, you can transfer it from another library. If our library doesn't have it, there's a network. You can read books from the library on your Nook. So the library has gone, they're online. You can plug into the library and download books from the library to read it. So I mean, as long as there's funding for the library, I don't think that they'll go away, and I think they'll
maybe not anytime soon. I hope they do stay. I'm not looking forward to it, but it just struck me that is one of the things that could ultimately paper and other things and other factors, trees, forests. The left gets so into it that we can no longer. Trees are endangered species, and we can't make paper out of them, and God knows where we could end up. But it just struck me after seeing that Twilight Zone, and the listeners probably know that I'm a Twilight Zone fan. I think that's one. I think it was voted one of the 5 greatest shows of all time recently.
By David Williams.
No, by himself, yes, exactly. No, actually it was. It's really funny.
I took a poll of one.
I took a poll of myself, and I found it to be one of the 5 greatest shows. But I saw that on a program where a number of shows that everybody knows about, I can't think of their name, but I sure know the Twilight Zone, and I really, really deeply appreciate the human nature side of the Twilight Zone, and all, so many great stories. I don't know how they came up with so many great stories, but they're very appropriate, I think. Anyway, if you want, Michael, we could probably, if Dwayne's going to be a few minutes, we could probably get into the markets and take a look at them.
Okay. Let me grab a chart that I don't have stuff all over,
Okay.
and then I can just flip it around to the different markets. Here, because if I try to flip around to different markets while I have all these indicators on here, it will be difficult to load. All right, close to that. All right. So what would you like to talk about, David?
Well, we could talk about any market you'd like to. If you want, we can start with the S&P 500, which is a very interesting and widely followed market, and also one that I began with and was hooked on, and to some degree am still hooked on, although now I look at other markets as well, and have for a number of years. But for many, many years, a long time, I really was hooked on the S&P and felt like I had to utilize that market and that market alone to get all of my, potential gains out of. I couldn't look at another market. It didn't make sense to. And if I had lost money, I had to lose money. It didn't even matter where I lost the money. The S&P owed it to me, Yeah. And I had to go back in and get it from the S&P. And I've spoken to people who say, I really want to get this loss back from this market. It actually becomes personal, that particular market actually is what they need to go after. And all of that is meaningless. You just trade the best you can and put it together the best you can and go from there.
Yes. I found myself saying that yesterday about gold. So I was down quite a bit in gold yesterday. And I kept saying,
I got to get it back from gold.
Got to get it back from gold. And then I got it all back in the Russell. But
yeah, and listen, there's the old saying, one door closes and another one opens, that kind of thing. You have to think about that in terms of markets as well, because you may be out of sync with a particular market. In fact, I can assure you that you and I and everyone gets out of sync with a particular market, or we just are out of sync with trading, and sometimes taking a break, even though we don't want to, is the best thing to do. And you can tell, one good way to tell is if you're struggling to, if you find yourself just grinding on a trade or you're just grinding during the day, it should be a very comfortable, relaxing, strangely enough, it should be comfortable and relaxing to trade. Obviously, there's going to be some risk involved, so you're going to be stepping into some risk and you're going to have those feelings, but it should not be a grind. If it is a grind, if you're really frothing over your trading, may I suggest that you're doing it wrong, you're approaching it wrong, you're thinking about it wrong, because it shouldn't be that way. And I did that for many years, and I'm telling you, I aged. I remember at one point, friends of mine told me, because my nails had grown long, my hair had grown long, I looked haggard and worn out because I was burning myself out on the market. And there's so much more better you can do. There's so much better you can do than that. You do not have to turn into the guy from Back to the Future, the professor, in order to trade the S&P or any market effectively. There is risk involved. You will have sometimes, depending on what size you trade in, it's all really relative. You're going to have risk on, but you learn to relax and to appreciate the opportunity that risk offers you. Instead of being afraid of risk, understand that it is an opportunity that it's offering you. Because I had days where I woke up afraid that I had to go trade. I'm sure some listeners will relate to that, where you wake up, your eyes open, you think, oh no, I have to go put more of my money in the market and hope that I get a return from it. All of that is coming from fear. All of that is living from the worst case scenario in your head, and which is always that you lose everything, that the girlfriend leaves you. It's like a bad country song. Your dog dies, your girlfriend leaves you, your house crumbles, and you can't trade the S&P anymore. Whatever. That's fear. That's how fear operates in us. And you have to actually take an active role in stopping fear from dominating your life. In fact, understanding would be a good way of saying understand your way through fear, because fear is a very primal emotion that comes up, and it's a very, very bad dictator of your life and your actions. Look how foolish and how badly we've all acted when we're under fear. And I'm not talking about the fear of falling off a cliff, where you step back and you did the right thing. I'm talking about fear of other types, psychological fear in situations. A policeman pulls you over, and because you're nervous, you know you already look guilty, and and all that stuff, and you just can't act normally, and you really can act normally. But we've accumulated these things, these ideas, and those ideas are at work, and sometimes a whole set of a couple of different things happening in a single day can set off a whole bunch of these fears in you, and you just have a really bad day because you're living so much from fear. So keep an eye on that. I'm a real fan, and we'll get to the markets, I'm a real fan of turning the arrow of attention that's always out there, always looking through the camera at the world on the other side, turning that arrow backwards and looking, as you're looking, look at the looker, the person looking through the camera. Keep an eye on that, and just that alone will do an amazing thing over time. It slowly gets you acquainted with yourself, and it does much more than that, but it's very difficult to verbalize it. So we'll get on to the markets now.
I apologize, guys, for the interruption, but it truly was an emergency. My wife had dropped her iPhone in the toilet, and she was all a dither. She didn't know what to do, so I had to walk her through it. No, actually, I have brought a couple of them back to life. What you do is you put the phone inside of a woman's stocking, like the little knee high or something, tie it up real tight, and then you bury it in a jar filled, like a great big jar filled with brown rice.
This sounds like witchcraft.
Uncooked brown rice, and it draws the moisture out. It takes a couple days, but yeah, I've brought 2 phones back to life that way. Truly amazing. When I found that little remedy on the internet, I'm like, yeah, sure. So I didn't have any, the phone was toast, so I go, you got nothing to lose. Rather than run out and buy a new phone, at least give it a try, and sure enough, it worked. It actually worked.
Well, that's great information because
yeah, it just sucks the moisture out of the phone.
Well, that is good information. It almost sounded like witchcraft there for a minute. Wrap it up in a sock, take some goat hair, tie it around, put brown rice near it.
Don't forget the eye of newt. You got to have the
eye of newt is always necessary. Exactly.
What is a newt, by the way? What is a newt?
I think it's some kind of a goat or some kind of a hooved or cloven hoofed animal. I'm not sure anymore.
I'm familiar with fig Newtons, but Homer says it also works with white rice. Did I say brown rice? Oh, that's the health nut in me coming out. Yeah, white rice will work as well, as long as it's uncooked.
Okay.
Oh, it's a lizard, according to Pete. A newt is a lizard.
Oh, it's a newt is a lizard. Okay, sorry. I'll have to brush up on my witchcraft.
So what did I miss, guys? I see we got David's charts up. That's a rare treat. We don't get to see those too much. Or no, is that
that's actually my chart.
Oh, it's your chart. Oh, okay, because the black and white, I'm used to seeing black and white candles on David's chart.
No,
okay.
No, I just took everything off.
I got you. Okay. So what I miss?
Nothing. We're just meaninglessly dribbling along, and we were just getting started on the S&P actually. So if you want, we'll get right into that.
Okay. Well, Michael, do you have to run, or are you going to hang out? Or?
I do have to run.
Okay.
That
thing is propagating. It should be done shortly, and then we'll go in together, and I'll do a little bit of training with you on it. Okay.
Excellent.
Okay.
Okay.
All right.
Sounds good.
Okay, I'm going to take the charts back. I'll go to the S&P, and then we'll just get right on down to business here.
All right.
David, I made the comment earlier in the radio program today that this week for us had just been the kind of why people become traders, because we have seen so much opportunity, actually now with today's move in both directions. I mean, no huge moves or anything, but just lots of little opportunities. Is that do you feel the same way, or?
Well, I do in individual markets. Obviously, we all trade a number of different markets. I do feel that way.
I was speaking mostly about S&P, Dow, and soybeans. Those were the 3 I was referring to.
Yeah, for us, the S&P, cocoa had a huge move that we were in, and it was a very, it still is continuing to move, very big move. So yeah, there's been some decisive new action this week in the markets, including the S&P. And if you want, let's go over the S&P and get past this. We'll go to some of these other markets that some of the listeners will want, I'm sure, to talk about as well. Let's see. Let's start with the S&P. So we go back. Our longer-term outlook, I know I've repeated this every day, but it's longer term, so we'll go over it. We had talked about on the week of May 20th that the market should close below 1666. If it does close below 1666, we would first go down to 1628 to 25 on the downside, or 20. I don't have the exact numbers in front of me, but roughly between 1628 to 25 on the downside. That would be the first target on the downside, and then the market would bounce and it would continue lower. And we talked about this on the radio, down to at or near 1606. That would be the next big target on the downside. For our subscribers, we basically said if the market breaks 1624, if we get weakness below 1624, short the market and exit at or near 1606. So in our support and resistance panel, we have 1607, 1606. But these targets are targets that are based upon the roadmap principle, which is something that we use to forecast where markets are going to go. Obviously there's many levels between 1624 and 1606, but one of the nice things is that you can hold and book, and I think it's a wise thing to book profits at critical levels on the downside. So whatever those levels are, whether you're using your own, whether you're using Dwayne's and Michael's, whether you're using ours, the levels that the market reaches where there might normally be a bounce, it's always a good idea to book something there on the way to your final target. So in our case, by the time we reach our final target, we're actually holding our smallest position. And a person would say, well, why not just short it at 24 and hold for the at or near 06? And the reason why is because the market can and will sometimes do something different, and you want to have booked something so that you're doing the right thing every time. And if you do the right thing every time, you don't make the most amount of money, but you have the most consistent performance. And that's a very, very different thing than making the most money, although I would argue that doing a very consistent performance will get you the most money over time. Consistently performing in the market will get you more money than somebody who, as an example, is trying to get the home run every single time. And you should really ask yourself which one of those people you are. It's a good idea to have an idea of which one you are, because you have tendencies, proclivities, drives, compulsions that will make you want to be one or the other. And I've usually, and for me, I've been relatively conservative my whole trading career, and I like the idea. It doesn't bother me at all that if I had, let's just say as an example, 10 contracts on, that by the time it broke, below 1616, I'm holding for the latest, for the final target down to 1607, 1606. Great. I have my smallest position on, but I did the right thing just in case, and over time that has worked very well for me. So anyway, without putting a chart up, we all know today's low is 1607.50. The market made a real good attempt at that. So the break of 24, the decline to 1606, 1607 has occurred. And normally there should be a pretty good bounce now that they have completed that downside level. And finally, also, the forecast for the weekly chart was that we would have a multi-week decline. This is week number 2. We're halfway through week number 2 of the multi-week decline. Is it possible that we will go lower than that? Yeah, it is possible that we will, and there are some important levels well below where we are, but I do want to see how the market handles the 1607, 1606 level that we originally forecast early this week for, even last week actually, for this market. And the fact that they've completed it, or essentially, come within a 1.5 of it, is good enough right now. Let's see what they're able to do on the upside. We'll make the judgment at that time. And I think that's everything. The people that sold calls based on this, which we've always suggested for people to consider that, we took some of those off at 1616 today, the people that sold calls in the index, and we held the remainder for the possibility and completion of the 1606 and 1607 level. So that's where we are on the S&P. We've got big movement down today. I think this is a $17 day down. That's pretty good, and it was a whole lot more than that just a little bit ago. So we've had, we've got some pretty good volatility here. It's been a pretty good day.
Yeah, and
so happy about this.
Guys, if right here we hit this weekly zone 1607/08. Now, if we've still got 27 minutes in this hour, and let me say that I'm using Globex charts, which means my candles start at the top of the hour. David's charts start on the half hour. So if you're following Messenger Pro, or if you were to look at David's charts, they would look different than ours, and that is the reason. He uses a day session chart for most of his stuff, I believe, whereas we use the Globex. Now, he just got a brand new candle that only has 4 minutes of life under its belt, but on the Globex version, as you can see, the low of this candle is lower than the low of this candle. If we close above the high of this candle, okay, that is considered to be a bullish engulfing candlestick pattern. We do take that rather seriously when it is in the proper context. And what is proper context? Well, we've had this pretty big move down. So there's the context. Here's the fixed support and resistance. Throw in a bullish candlestick pattern, and beginning next hour, we would be interested in trading this back up to this weekly trading zone, 24.25. But again, that will depend on how this hour closes. Just because we have a big green candle right now, 25 minutes from now, the market may have painted us a completely different picture. So we're going to wait until this hour is finished. And then, and which again, I always believe in giving credit where credit's due, and that whole, looking at the hourly and waiting for an hour to finish and then making a decision. That's, I complimented Mike Reed this morning on things I had learned from him. That is something that I learned from David. When I first met David, I was trading like 89 tick charts and 144 tick charts, and here comes this guy talking about hourly charts. What? I mean,
Yeah.
A trade that an hourly chart, does that come with a gold watch? I mean, like a retirement account, an hour? Oh my goodness! But now I've changed my ways. So
yeah, well, there's a lot of information in the market. There's a lot of ways to extrapolate it, and you were extrapolating at your time scale or tick chart at what information was there, and maybe what this was a reminder that there's other levels, and they are important in directing some of those smaller time frames. So that's very, it's very helpful to view everything that you can. And all we're all trying to do is just get a high probability that an event's going to take place, and then we want to take our best work to try to trade that. So anything that appears in front of you on a single time frame exists not in a vacuum, but in a whole series of movements that led up to that point, which that if you believe that the markets are not random, which I would hope that most of us do, that they have meaning. They have absolute meaning. So,
if you
anyway,
believe in random,
there you are. You've got a good memory for music there. Anyway, so that's the S&P. They're bouncing now.
I taught my little girl how to sing that in Walmart the other day. My wife was shopping, and she was in the cart, and I taught her how to sing it. And my wife walks up, and she's got this funniest look on her face, and I'm like, "What?" She goes, "I'm on the other side of the store, and I can hear you guys clear as a bell over here." She said, "Dwayne, what's come over you? You're singing out loud in the middle of a busy department store." I go, "Is that bad?" She goes, "No, it's not bad. It's just," she said, "it's just not you." And I said, well, I guess kids do that.
You're a changed man.
I guess
You're
I
a changed
am.
man. Also, being around kids, I don't know if you've noticed it, but sometimes the goof in you comes out if there's kids there. You're around adults, and boy, that really happens to me too, and I'm just a silly idiot around children.
My kids all the time, they go, "Dad, you're so goofy." And I'm like, I know.
Mm-hmm. Yeah. No, that's good. I think that's a good sign. Being having a great time with children, or having the ability to have a great time with children. My stepfather used to always say, and he was half joking, but it still kind of hurt, children should be seen and not heard. Or, yeah, seen and not heard. That's what he said.
I grew up with that too. Yep.
Yeah, the seen and not heard thing. Because we didn't have anything important to say, you know. So that's...
So our slogan for the summer is every time some kind of monumental little thing happens, like, I don't know, we get pizza, we all look at each other and nod, and we all together, we go, Summer 2013, Reeves Gang, on the road, and we do a high five, a group high five, and that's, I don't know, it's just goofy.
It's goofy, and that's what makes it valuable. Your stock just went up in my book, just from that alone.
Life's good.
Oh, that's good. All right, well, let's see. Let's zip over. We'll move past the S&P. There's a number of other markets we can talk about today. Real quick on gold. I've mentioned this before, and I'd like to repeat it. We're not interested on the long side of gold until at least the third quarter of this year. So we're in June. We have 30 days left, and that will start the third quarter. And, you know, Dwayne was talking about really short time frames and moving up to the hourly. The quarterly has to seem like something from another planet for some people. You know, I mean, it's so out there. But it is a chart, and it has information in it, and you can use that information just like somebody working it's not a good analogy, but a crime scene where whatever information is there, they want. However they get it, and as much as information as they can get is helpful to them. And it's like that with markets. The more information you have, and we've talked about this before, if a person says, well, I just trade on a 5-minute chart, that's not all the information that's available. You may be able to trade on a 5-minute chart, but there's a lot of things that can play havoc that if you knew that those things were occurring, they could help you put a better trade together. So the more information, yeah, and there's also something called information overload, but that really comes from people who are trying to get 50 green lights to show them, you know, that it's time to get in. And by the time 50 green lights have given you that, either the move is over or, I don't know, the world may have ended at that point. So check your local newspaper. But you can't wait for too much information, because at that point, you know, you get overloaded with information or the move has already happened. And like we talked about the other day, risk is very valuable because it allows reward to exist. Because when there is no risk, there is virtually no reward. So there has to be some risk there. That's why the markets offer opportunity, is because there really is real risk there. No matter what you know, we are taking risk. What we're trying to do, all of us, is we're trying to find moments in the market, in the river, where the risk actually fluctuates in our favor. And we understand the market, that part of the river, and risk isn't a static thing. It doesn't stay, you know, at a certain level all the time. It fluctuates back and forth, and your ability to understand that and track that in the market will help you put a better trade together. So with gold, we're going to wait until the next quarter, but in the meantime, I've mentioned over the last couple of days, we have a current trade going in the gold market right now, where we're looking for, we had shorted gold at upon any daily close below 1414. And so we had a big dive down on May 31st off of 1414 down to 1384. We booked some on the way down in the 90s. It went back up on the 3rd. If you take a look at your daily charts, you can see they retested the 14 level again. They closed below it. That gave us a re-entry. They went down yesterday off of that. We booked something. And then today they've had a relatively small range. They've gone up to 1410. We've had a low of 1395. And we're just waiting right now in gold. So we have an active trade on the short side right now. I'm not encouraging anybody to take any new position based off this, but we are looking for, under normal conditions, lower prices. So we'll continue to watch that. Gold, many people don't trade gold, they just own it, just holding on to it. But remember that these metals have huge, huge, huge cycles that can go down for 25 years or up sometimes for 15. And for long, long periods of time. These are big, big swings. And depending on what you believe about the metals, it's probably not a bad idea for you to own some physical gold. Just as a, if you want to think of it as a hedge against inflation, if you want to think of it as just some absolute certainty that you've got something of value, it's not a bad idea to own some gold. And I don't mean the ETFs, I mean the actual metal.
A question for you, Dave, from Ed. Is there any upside price level that would make David like gold?
Well, I like it enough to have been in it 4 years on a longer-term basis, but
I guess he's referring to getting, ready to get long
bullish
again, bullish
yeah.
Intraday, swing trade, that kind of thing.
Yeah, let me say this about that. It's only a friendly, not warning, but a cautious tone that I'm putting out there that we're going to wait until the third quarter before we would consider getting long for a number of reasons that are really related to reflected wave, for those of you that know our turning point method. On the other hand, he's asking, so putting that aside, what would get you bullish on gold? And I'd have to say at this point, I would probably need, in order to be bullish, especially this week, let's talk about immediately, if this week were to close above 1422, that would probably get me bullish on gold, especially if it was decently above that. That might get me bullish 22. Now, the reason I'm saying this, the reason this is
right there. Okay.
Yeah, this is 1422 is just really actually it's just an old high that they made this week or last week, excuse me, and I'm only picking that because the market would have to effectively, in classical terms, break out above that level. But the reason it's important right now, where I wouldn't normally be able to say this, is because the week of June 10th, plus or minus a week, next week, is very important to us, and the market normally would want to test 1378 to 1376 during next week. So if somehow they were able to break out this week prior to them completing this on the downside, that would indicate some much larger force coming into the market at a unusual time, unusual enough that we would consider it perhaps an inversion type of setup, and that would get me bullish. As it is right now, we normally would expect a trend to lower prices into next week, and into those levels that we just talked about, the 1378 into next week. So I normally wouldn't give that out. That's actually something that our institutional people know about and have been trading, and that's why we've been trading against this 1414 for several days. But to answer his question, Ed, yeah, a weekly close above 22, especially more than, say, a point or something, but a really substantial close would get that interest going for continued advance. That wouldn't necessarily mean that the final bottom is in. It would just give us a good tradable move on the upside. So keep that in mind. That's, I think, something that we would watch out for, and we would not allow the market to even get that high. We already have our stops placed and so on. And again, somebody mentioned the other day about they have alerts and things like that because they don't want their stops in the market, and to me that sounds just fine. But there are going to be times where those alerts are hit, and by the time you get the alert and check it out and look at the market and have your ability to make a move, quite a bit of action could have already happened. And so one of the beautiful things about stops is that they're already there, they're already working. It's like a guard dog in a way, already working. And Dwayne talked about this the other day as well. Who is your they? Well, the they that we used to talk about was them on the floor, the dirty, nasty pit trader guys that somehow got all the knowledge about where all the stops were, and they, the pit trader guys, would then, in cahoots with each other, run the market to trigger all those stops. That's what they used to do. Well, they're gone. And the new they is who? Who is the new they? Because the new they has to be inside of a computer at this point, because all of the trading is computerized. So I'm not sure who the new they is, but people do believe that once you place your stop in the computer, that somehow that information is getting to the new they, and they are going to go run the market to get your stops. I challenge any individual or any group here right now on live radio, I'll pay you a large sum of money if you can prove to me that either in a group form or by yourself, if you can run the market to a number. I'd love to see the demonstration of that, and I await for my phone to ring off the hook with all the theys. Hey, let's say this: $10,000. I'll give $10,000 to any group or any individual here right now. This offer will expire at the end of, let's say, June. If you can demonstrate to me your ability to run the market to a number, you show me that, and I'll wait by my phone. And so that's because I don't believe there is a they out there that can do it. And even when the floor traders were there and had access to the book and knew where your stop was, however they did it, with hand signals or whatever they did, smoke signals, what exactly did that mean? Did they all mean they're going to all start buying the market? Well, the floor traders are an extremely small group of people against waves of tens of millions of people who are out there buying and selling in the market. Are they really going to drive the market to your number, to the number they want to go to?
Well,
let's
let's
just say they could. Go ahead.
Yeah. Well, I think, David, that when the floor was in full swing and during the lunch hour when
it was
volume
quiet, yeah,
would drop way off quiet. Now, no, in answer to your question, could they push the market 10 points to go take out people's stops? The answer, I would have to say, no matter how many of them there were, is absolutely they could not do that. But if it was a matter of pushing it a few ticks,
a few ticks is a different thing.
I think they could, and I would love if our floor trader, who did you see that picture the other day of him, or you'd already left the show?
I'd already left.
I'll bring it up here in a minute. This is a picture of him in 1991 when he was on the floor. But I would love to have him come on one day and be a part of the show and let us just ask questions about what it was like being on the floor. That would be fun, right?
Mm-hmm. That would be wonderful. That'd be a very, very nice program.
Will you do that, Jerry? Will you come on one day and just chat with us, chew the fat, shoot the breeze, have a cup of Joe? He said he would. Beautiful. All right, we'll figure out which day will be best for you, okay? All right.
Yeah. So to finish that thought up, basically I'm not concerned about that too much, but it would take quite a bit of force for the gold market. We were talking about gold getting back above the 22 and closing above, and if it does, that technically indicates quite a bit to us. Normally gold will continue down into next week, down to the 78 level or lower, and test those levels. If they can't, then from its perspective and from our perspective, we do have something happening on the upside. And there always is going to be two sides to a trading setup. What you want to do is you want to go with the highest probability, and even in many cases, it's not always true, but in many, many cases, you can get into a position, just like what we've done with the daily chart, selling against the 14 and closes below 14, the 1410 and so on. You can get in and get several swings down and actually have several successful trades off of it, and in the end, it still ends up breaking out on the upside, and you say, hey, they should have gone down further, they didn't, but you actually got opportunity to get some gains out of that. That's one of the nice things about the market, is that even if they are going to go the other way, there are often opportunities for you to have a successful trade or two before that happens, and that is beneficial. It means that it's not an all-in or all-out kind of thing, and I like that. So with regard to gold, we're waiting on the third quarter of this year before we get more bullish on the long side. If we were to get bullish on the long side, it would be after as we get into the third quarter, and secondarily that we have lower prices indicated into next week, as I discussed. So we'll continue. And I do think that people should own. I do like the idea, even though those commercials are so stupid, but the commercials that show William Duvain, even though I really like those commercials, I really found that I kind of like William Duvain. I really think he's he's very good at, you know what I'm talking about, Dwayne, the commercials with him riding on his horse, him talking over about how he buys gold, Rosalind Capital. He does a really good job on those commercials. He's very relaxed and I think he makes a great persona for this. I mean, he's really, I didn't realize how good he was until I saw him in these silly commercials. But it is a good idea to own some gold. And you can either own it and let them store it in a warehouse, which most people wouldn't want to do. You have a warehouse receipt. Or you just physically have the gold and you put it in your bank safe deposit box, or you store it somewhere. And, you know, it's just not a bad idea to have some. So consider that. It's not going to kill you to have some gold. That's for sure. So,
hey, Jerry, will you paste in that link again that you sent me yesterday, if you have it handy? Okay. So, you know, David, I'm long-term bullish on gold. I have been.
Yep.
And continue to be, and they're really talking trash about gold. You know, the heyday's over, the shiny's gone, and there's a lot of people beating it down. But you know what? It wouldn't take but 2 or 3 really strong up days, they'd be singing a different song. You know?
Yeah. Oh, we see it over and over again. I mean, they're just gonna, you know, the crowd is the old saying that the crowd is always wrong is wrong, because if you look at the S&P for the last 4 years, would you say the crowd was wrong? I mean, the crowd, you know, people were buying the stock market because there were no returns in the banks, and there was no returns for a while in other investments, and a lot of money went into, there's no return in bonds, the bond yields have dropped off to nothing, so people bought into the stock market, and the crowd was right. But there is a place where the crowd is wrong, quite often, in the markets, and you can learn about that. And I think, honestly, Mike Reed would be a person who probably has more insight into where the crowd is right and wrong than myself, just speaking for myself. But the crowd isn't always wrong. That's for sure. The crowd is not always wrong. But at the endings of big moves and the beginnings of big moves, the crowd can be wrong quite often. That is, there's no doubt about that. We see that a lot of times. And in regard to this subject here about gold, you know, all it has to do is go down for a while. And I've said on the program, we've talked about it, Dwayne, you know, what news event would have to come along to push gold dramatically higher, more than just a nice technical bounce? What would have to happen? Because we have all gotten so numbed to the world events of terrorism and whatnot. None of that stuff is working to make gold move up. So it'll be interesting to see how this bottom. I'm thinking that by the time gold does put in the bottom, Dwayne, it's going to, there will be some, you know, in the third quarter or beyond, there will be some major news associated with a multi-quarter advance. We do have, by the way, a forecast out for that specific thing with price levels, where they're going to go, and so on, in our institutional stuff. If people want to, they can come by, give us a call, 888-231-4702, and we'll put you into the institutional report for 2 weeks. You can listen in and get the information and see if it's useful to you. It's very interesting. We have a longer-term forecast for gold, where it's going to be, and it's the main reason why we are still maintaining our long position that we've been holding for a number of years here. That position used to be worth a lot more money than it is now, but there is I guess there's a method to our madness. I would have preferred to have gotten out at the $1,500 level. The other person involved in this decided not to, and so we're still with our whole position. So that sometimes happens. That's, you know, that's part of trading. Okay, so we'll move on, unless there's anything else you wanted to throw in there, Dwayne, on the gold or anything else.
No, not really. I was running an hourly chart earlier, and we had this little pennant formation, and so then I just switched it over to the daily, and we kind of have the same thing going there. I don't really have any. I don't have any bigger picture forecast right away. I think whatever you just said covered it.
Yeah,
well.
We'll just wait. We're just really waiting.
Yeah.
We're just really waiting along with everybody else here.
There's a question here. Let's see. When you say close above 1422, do you count the pit close of 130 as the close, or do you use the 515 close, David?
Well, I'll tell you what. On this scenario, the one where we're saying that the normal thing is for the market to do such and such, go down into next week, and we're talking about potentially buying, which taking the unusual position, I would want to see both close above it, to be quite frank. I would want to see the market really show me that that's the case. So both of them would do it. Much of what I do in trading is based on the pit close, and that's just our personal preference. You can do it any way that you want to. You can take the indications any way that you want to. But most of our stuff is based on the regular trading hours. Here's a good way to think about it. Under daily, we generally do not use Globex. Over daily and above, we generally do use Globex. We include everything. But when we're below the daily level, we will often you go straight to pit only. Daily and above will include the Globex in our work. So hope that's helpful. Both of them would be required for me at this point. So let's go on real quick. In the U.S. Treasury bond market, we've had a huge decline, one of the biggest declines on a monthly chart for a number of years. We've talked about this many times, and I won't go into it again, but we have no new information trading-wise for this market right now. We'll continue to watch it, and like I've said so many times, take advantage of it while it's still here.
This
the
is
low interest rates.
Yeah, again, this is a daily chart, guys, and we can see that this little area that we just sold off down to. Where did my chart keep doing that? It's holding. I mean, we've spiked below it. This is just an example, not an exact number or anything, but prices bounced, and now, I mean, if this thing breaks, what do we have below us anywhere? We don't have anything in recent history below this price, correct?
You're talking about in the bonds?
Oh, I have access to, I keep forgetting I now have access to continuous charts. So,
yeah, there's definitely numbers below us.
Well, I know there are, but I just meant in recent history. See, I can go way back now, whereas before I was limited to just like the June contract.
Oh, I got you.
See,
okay.
I now, hey guys, for those of you that didn't get the memo, if you're running the DT Pro platform, if you're a partner, you should have got the memo, but maybe you didn't somehow. All you got to do is type in, instead of typing in ZBM3, which you can still do to bring up just the June contract, but you can also type in the @ symbol, ZB, okay, that's your 30-year bonds, and see, I'm all the way back into, April of last year.
Mm-hmm.
See? So, the last time we got down to this price, 141, that would have been back in April of last year. Is that what you show? Do you show that same thing, David?
Yes, I do.
Okay. All right. And I'm really excited. I know, guys, it's some middle-aged men need a red convertible. I already had that. I'm more excited about getting continuous charts than I am about the what do they call that? The crisis, the middle-age crisis. There's another word for that. What do they call it? The middle-age crisis thing?
Yeah.
Maybe that's it. I don't know.
Maybe that is it.
Yeah, I guess it is. Okay.
Well,
I'm just happy.
Okay.
Continuous charts.
Continuous charts make me happy. That's a T-shirt. All right, let's move on to the euro, which
or ask me about continuous charts.
Yeah, that's good. We've been keeping an eye on the euro here. I'm reading and trading the dollar better than we are following the euro. So the euro we're watching it. We don't have anything new that we're putting out on it. They did run up to a target, and one of the things that we talk about in reflected wave, there's a principle which is that important turns occur at important prices, and this occurred just a little while back. A great example of that principle playing out, which saved us from shorting the euro. And I think I mentioned it on the radio, but I'm not 100% sure. But we certainly did to our subscribers, which was that the market had advanced, and to some may have looked toppy, but we needed to see the market get up to 130.83, 130.85, and before we would take any new short entry, because important turns occurred at important prices. And so that was this. There's a great example of that occurred in the euro, and we feel that That's just one of many trades in a career that you can say, oh, we won't take that one. And that's just as good as a win because you didn't step in and take a loss. So strangely enough, you can get ahead in the market without having a winning trade. You just save yourself from a losing trade and do it based on a principle that you know is workable, and that's just as good as a win, avoiding an unnecessary loss. So keep that in mind. That's a big deal to me. Crude oil, we're bullish on. We forecast on the program that the week of May 27th would mark a bottom in crude for a multi-week advance. The actual bottom came 1 week late, slightly lower prices. Last week, the low was 91.56. This week, they got to 91.26. But we've got a big turnaround here. I like the idea of selling put premium in this market. And for those of you that are optionable people, or if you want to find out more about it, you can call Bert Schlichter at Daniels Trading. He'll tell you 866-928-3310. He'll tell you what the margin requirement is and so on. But we think that there's a multi-week advance sideways to higher coming here off of this, and that's good for selling options. So we're bullish on, longer-term bullish on crude. Now remember, these are long-term outlooks, like multi-month viewpoints that we're talking about here. So we'll keep that in mind. And then let's see, a couple other things. We talked about we were expecting the June Australian dollar to continue and make new lows in the month of June. June was the next important bottom for this market. They have made a new low so far. We're leaving that market alone until later in the month. So we're not going to be shorting or doing any, or excuse me, going long until we get further indication.
Well, this thing just keeps dropping, doesn't it?
They keep dropping, and this is that trade with the George Soros and the whole business. And that has given me some caution. That has given me some caution there. There's there's just a respect of the fact that they may know something that we don't know, and so on. So I'm gonna, that will be one of those trades that if we take it, it'll be for much more confirmation and less profit potentially. Okay, so
let me just throw this in. All right now we're trading at, what is it, 95.24? Is that right?
I think so.
95.24. The last time we hit that price, 95, right? Look at that. That is June 5th of 2012. Okay, now let me just extend that out.
Like 10 minutes.
And there we go, guys. We just put in a little double bottom and actually traded through the low of June 12th. Okay. All right.
Okay. All right, real quick, I'll just take a couple last markets here real quick. The U.S. dollar, we do have a setup in this. Unfortunately, I can't give that out. I'm so sorry if I can't, but this is something we just spoke about this morning, and but it is what it is, and if you want to check it out, you can, like I gave you the phone number before, if you want to listen in, you can listen for 2 weeks. This is one of the markets that has it's an easier read to us than the euro is right now. So we'll leave that off the table. A couple other things I do want to talk about that we're real happy about. Most of us do not trade in cocoa, but in our institutional stuff, we had long signals in cocoa based off the reflected wave weekly bottom, and that just occurred. And the cocoa market had a very explosive move up over the last several days. And we got a nice piece of it. So this is a very nice example of a market giving a multi-day. The last 3 days have been straight up, and we've been able to take a good piece out of that. We are going to wait until tomorrow before we put any new trade. We're all out of that trade right now, but cocoa has had a nice move. One other market that we have talked about and traded in that many people don't is copper. Copper also has had a big move up. We were forecasting a move in copper off of the May 30th bottom. You may recall that there was May 30th. It was a big important date for turns and for a multi-day advance from that to $335.50. They did that yesterday. and today they're up at 337.05. So a really nice swing in copper. Not a lot of people trade in copper in terms of day trading and some other longer-term home traders, but it's a very active, fast-moving market that I think it's worth taking a look at because it definitely gets down to business. It's much more volatile than the S&P is. There's no question about it. And Dwayne, I think right now that's just about everything we have right now, and I do have to run a little bit early today because certain factors here. But I'm interested in the remainder of the week. I'm looking forward to you having the pit trader on. I think that would be a lot of fun. And listen, other people have experiences that none of us have ever had, and it's very valuable to take and open yourself to those experiences. I think it'd be wonderful to have him on and give us some of those.
Yeah, he said he'd be happy to do it. So.
Okay. Well, very good. Well, I appreciate the questions today. Hope to see you guys here tomorrow. Dwayne, thank you very much for having me on the program, and I look forward to seeing all of you tomorrow.
All right, David. Have a great afternoon.
Okay. Thanks so much.
All right. Take care.
Talk to you guys then. See you soon.
Bye.
Bye-bye.
I didn't notice what time it was. All I know is that I fell in love with you. And if all my dreams come true, I'll be spending time with you. Every day's a new day in love with you.
Guys, I think I just hit upon the more appropriate exit song for David, and I'll accept your votes here. Let me cue it up. Y'all ready for this?
There's a man who leads a life of danger. To everyone he meets, he stays a stranger. Every move he makes, another chance he takes.
Every move he makes, another chance he takes. But he can't tell you about it. Oh my God. Is it legal to have this much fun at my age? I hope so. With every move he makes, another chance he takes. But he can't tell you about it. All right. I'm just having fun, David. God bless you, brother. We appreciate all that you do bring to the show each and every day and have for years. David's been coming on the show now. See, we launched the station in 2005, and I think I met David in the latter part of 06, early 07, somewhere in that time frame. And he would come on. It was sporadic. That was before we had the benefit of live charts and the webinar, GoToWebinar setting. We truly were just radio, just audio, and I would actually call him up live on the air, do-do-do-do-do-do-do. And Johnny would answer the phone, and I'd say, hey, it's Dwayne for David. He'd go, hang on, and some days he'd be able to come to the phone, and some days he'd be busy, and some days I'd have to call him back, and then we would talk. And we did have some very long, because we didn't have charts to distract us, we would get into some pretty deep philosophical type conversations. And if you have an interest, you can drill back into the archives over at the CFRN Museum, which would be archive.cfrn.net, and you can actually see what we were talking about on any given day back in 2006, 7, 8, I've archived all those shows, and I don't know what I'll do something. Well, maybe they'll turn it into a movie someday. I don't know. But anyway, all right, let's take one last look at the markets. Let me see if there's any questions in the chat box. I am going to take off here pretty quickly, but I had promised somebody that I would answer something for them and talk about something. If you have a burning sensation, you should see a doctor. No, I'm kidding. You should type it into the box if you have a burning question, and I'll try to answer it if I can. Let me get the chat box out. I know there was a question here just right as David was leaving about soybeans. I spotted that, and we'll ask him tomorrow. We've had a killer week in the beans, and I'll show you the chart on that as well. Yes, Pat, you can. Great question, Pat. You can listen to CFRN live via your iPhone or via your Android phone, any kind of smartphone. In fact, your phone only has to be reasonably smart. Okay. Let me show you the app that you would use for that. And thanks to Keith, who turned us on to this quite some time ago. You know what? Let me just say this first. I believe that many people are not yet aware that the smartphone they carry in their pocket, the iPhone, the Android, and even some too, I think also now BlackBerry, it is actually a radio. Did you know that? Did you know that you can listen to radio stations from around the world live in real time over your smartphone? Now, the app is free. You can get a paid version. I'll show you that. The app's free. You stream live in real time. Here's the catch. Okay, if you don't have an unlimited data plan, it will eat into your data plan minutes unless you have Wi-Fi, like in your home or at your office or in the coffee shop or if you're at the mall. As long as you have access to Wi-Fi, it won't eat up minutes from your data plan. But if you're driving down the road listening live and you don't have unlimited data, it is going to eat into your plan. So be careful there. All right, the app is called Tune In. See right there, it just popped right up. Tune In. Okay. Tune In. Listen to online radio, music, and talk stations. Now here's the deal. Most all radio stations now simulcast over the internet. Okay. When we launched CFRN, there were hardly any stations that were simulcasting on the internet. We were a pure internet play, okay? In fact, internet radio at the time was the fodder of stand-up comedians, but that's okay. We still got up and combed our hair and put on a clean shirt and came to work every day saying that someday internet radio will find its way to the dashboard of your brand new luxury car, and people laughed. And lo and behold, here it is. It doesn't even have to be a luxury car anymore. Mid-range, even economy cars have internet radio. So you just you just hook it up to your 3G plan, right? And so you're good to go. All right, tune in. Go to there. Now you're going to want to do this from your smartphone, Android, iOS, BlackBerry. You can listen over the internet from your desktop computer, but I mean you could just go straight to the source. You could go to CFRN.net and listen to the radio program live from our site or from our toolbar. Okay, and I'll show you the toolbar here in a second as soon as this site loads. There we go. I have so many things running. That's why my connection's a wee bit slow. Run this time. Okay. So this is what the app will look like on your phone once you download it. Okay, you're going to just go to the App Store. On the iOS, it's called the App Store, and on Android, it's called Google Play. Go there, search Tune In. It'll take you to the app. Now, the free version, this is so cool. Now, I think the free version does this. I went whole hog. I sprung for the Pro version, which I think cost 99 cents, or it might have been $1.99. But it allows, if you're listening to a radio program, right, over your phone, and you have to get out of the car and go into the store, or you have to interact with somebody and do something, you hit the pause button. You pause live radio, and when you're done doing whatever it is you had to do, you hit play, and the radio program picks up right where you left off. This is live radio. It is so cool. Now, if you know ahead of time that you're going into a meeting and you're going to miss your favorite radio program, with the Pro version of TuneIn, you simply tell it, hey, record CFRN for me today from 12 noon to 2 p.m. Eastern. And as long as you have enough storage space on your phone, it'll record the entire show for you and save it as an MP3. Incredible. Technology, as you can tell, I get a little bit worked up. So in answer to that question, see, who was it? Pat asked a very simple question. Pat said, does CFRN have live radio for the iPhone? And I launched into a 10-minute sales pitch for TuneIn. It's great, man. Just come over here, search Christian Financial Radio. I got to go back in and tell it. I think, or did I already do that? Christian Financial Radio Network. What? Maybe I put it under CFRN. Oh, yeah, there it is right there. CFRN. Prosperity for God's People. Now, you're going to do this from your phone, and it's just going to play live radio. But what's so great is you can search from, you know, let's say you want to go by location. Now, again, I'm doing this on the desktop, but you'll be doing this from your phone. You can also listen to CFRN over your Roku device, your Apple TV device. Let's say we want to listen to something, Antarctica. When's the last time you listened to some radio in Antarctica, right? Or Africa. I listen to radio in Africa sometimes. Look at all these. You want to listen to a radio from the Congo? Top Congo FM. You just click it and play. And this isn't pre-recorded content. No, this is live. There's a DJ sitting there doing the deal. This is live radio. And again, I firmly believe that a large percentage of people walking around with a iPhone or Android phone, and even the $75 iPhone or Android phone that I bought at Walmart, where I have an unlimited data package of $45 a month through Straight Talk, this app works on that Android phone. I can stream CFRN live in real time over that phone 24 hours a day, 365 days a year, $45. The phone costs $75, and the unlimited data plan is $45 a month. What a bargain! What an incredible! And I can listen to any radio station. And if I download the pro version of TuneIn, which is either $1 or $2, I can record shows. I can schedule in advance, like 2 weeks in advance. Some radio show, they're going to have a special guest and do an interview. I can just program it in, a couple little clicks, boom, boom, and it will remember to record that show 2 weeks from now. That's amazing. Okay, back to your questions. Got to scroll up now. Okay, so you guys did like the Secret Man exit song. Okay. Soybeans, I'm going to get to that for you, Richard. Richard says, I have his vote for Secret Agent Man as well. I just signed up for the free trial. Will I receive an email giving me the link tomorrow morning? You know, Jeff, I just saw that email go out across the server, so you should have it. If it's not in your inbox, look in your spam folder, bulk folder, promotions folder. It's hiding somewhere on your computer. And if you can't find it, email support@cfrn.net, and I will manually send you the link. Now, in that email, there's also a link that will allow you to download the platform and install the indicators. It's got all of our phone numbers, mine, Michael's, Bert, Leslie. If you need any help getting your indicators installed and up and running, or your charts up and running, just call toll-free. Bert and Leslie are in the office today. They'll be more than happy to help you with anything at all you need. Okay? Pete says he'll have to convert his Chevy Bolt into a James Bond car with all the gadgets, like nuclear reflective wave. That's good. Oh, that's good. Is the ES still bearish, Dwayne? RG, I can't get my Android to find CFRN. Okay, RG, you got to download the app. It's called Android iPad. You mean you have an Android tablet? Okay, you got to go to the App Store, and for Android, it's called Google Play. That's where you go to get your apps. and then search for the TuneIn. Actually, if you just type in TuneIn, it'll pop up. But TuneIn Radio app. Download that app to your tablet. You can get the free version or the paid version. Once you launch TuneIn Radio, search CFRN. It'll find it, and then save that as one of your favorites. And what will happen is each time you open that app on your tablet, the little CFRN logo will be right there, and all you got to do is just click it and go. Okay? It takes about 30 seconds for it to buffer and start playing. And we stream 24/7, guys. When the live radio program is over, we're just getting going. Great preaching, great teaching. It's not me preaching and teaching either. It's the best I could find in the world today. Really good stuff. Oh, which is a reminder, if there are any of you, any partners who have not received their invitation to the video Bible study library that we now have access to, 2,000 videos. If you've not got your invitation, by all means, email me support@cfrn.net and I'll send it out to you. Rick says, I believe my iPhone can do everything but fix me breakfast. And soon there will be an app for that. You know what, Rick? There's going to be an app for that sooner than you think. The next time the astronauts go wherever it is they go, space, you know, some say they go to the desert. I don't want to have that argument, but they're going to print their food. Have you guys been following this 3D printing phenomena that's happening? You can get a basic 3D printer now for about $2,500, but they're developing technology. It's like a dehydrated food like you would have in these ready-to-eat. If you were ever in the Army and you know about those rations, the dehydrated food, you just add water and it comes to life, and now you have a hot meal. I'm doing air quotes, hot meal. But anyway, you'll be able to print a peanut butter and jelly sandwich. The dehydrated stuff will be like the ink cartridge in your printer now, and you'll tell it what you, in fact, you know what, we should do a show just on this topic, but you'll be able to go into like a Circle K, and whatever kind of snack you want, you'll just program it in, and in the back of the store, they'll have these huge containers filled with all the different ingredients. And based upon the code that you punch in, it knows how to mix those ingredients, shoot it down through the nozzle, and it literally prints you a sandwich. It will print you nachos. It will print you apple pie. Is it going to taste good? I don't know. It might taste like paper. I mean, come on, we are printing it. But that's the way of the future. Manufacturing as we know it is changing. You know how when you broke the little dew floppy on your lamp next to your bed and you had to go online and find the part and order it and wait for it to come? No more. No more. You'll go to the manufacturer's website. You'll download a little file that has the blueprint for that little doohickey. You'll feed that into your printer, and it'll just manufacture before your eyes that little piece out of plastic. They're working with plastics and a couple other things right now. But the food side of it is a whole nother, you know, I mean, they're saying we'll reach a point where you'll be able to, like, if you need a new pair of pants to wear out to dinner, I know, it sounds crazy, but you'll print them. You'll just print them. Moving on. Rick agrees that TuneIn is a great little app. RG says he'll try that. Pat says great. Jeff says thanks. Yeah, RG, printing body parts. I've heard about that too. They're working on all of this stuff, guys. It's so fascinating. The time that we live in right now. And as fascinated as we are by all that's going on right now, just think what it'll be like, you know, 50 years or 100 years from now when we're gone. I doubt there's anyone in this audience that'll still be here in 100 years. Well, we're all here forever because we are eternal, but you know what I mean, right? Okay. So there was a question on soybeans, and I said I would address that, and so I will. ZSN. Oh, I'm going to do the, I got to start remembering to use the continuous at ZSN. Okay. Let's try that again. At ZS. Oh, it's just at ZS. There we go. Okay, continuous chart of the soybeans. Now let's look at, let's go to our tweets. We originally sent out a tweet on Sunday night, 36 minutes, as I recall, after the Globex Open. I'm going to let this thing get fully loaded here. There we go. Ready? Still not ready. Now it's ready. So we got to scroll down to Sunday night. Okay, ZSN3, this is the tweet that went out. I see two options. Consider buying a pullback to $15 or buying $15.27 on a stop. Stay tuned for updates. Okay, now let's look at this chart. This is a daily chart. Sunday would be, let's see, today's Wednesday, Tuesday, Monday, Sunday. This was Sunday right here. Okay. And we were talking about being long above 15.27. Okay. Now, here's let me just show you. Because again, this part of the show every day is where I attempt to demystify the markets for you to the best of my humble ability. You see this 1500? Remember what the tweet said? Consider a pullback to $15. So what I was looking for, now again, hang on, today's Wednesday, Tuesday, Monday, Sunday. This is the day that the tweet went out. Let me highlight that. Sunday, Monday, Tuesday, today's Wednesday. Okay, so I was working with this swing high and this swing low. Okay, all right. So let's grab our little fib tool and go from here up to here. Remember, this information we didn't have at that point. So I was looking for a pullback from here on Sunday back to 1500. Okay, I didn't get it. But this is Friday. No, this is the candle. Because the Sunday night Globex Open, that actually is the Monday session. Okay, so what I was looking for was a pullback. Once we opened on Globex, I wanted a pullback to 1500. That was my preference. We don't always get what we want. At least I don't. I don't know about you. There we go. So, grab the right thing. $1,500. Okay, that's close enough. All right. So, all I had was Friday's information to work with, but I had this swing high and this swing low, so I threw down some fibs, and I could see that the 38 was way down at 1480. But I had some other information on some different charts. I was using CFRN indicators. In fact, let me show you. Insert indicators. Oh, you know what? I think I got to reload that. Yeah. All right, unfortunately I can't show you that right now. But if you've got the oh there, yeah, there we go. Never mind, it just took it a minute to load. All right, I was actually working off of was I working off of an hourly? Possibly. Let's see. Oh, that's 30 minutes. Let's go hourly. Now I got to make all my drawing objects go away. Is this system traded on a particular platform? Yes. CHR, you're typing into the chat box on the website. Are you here in the radio program? Because I'm typing you in an answer, but if you can hear my voice, then I don't need to type. But in answer to your question, yes, the DT Pro platform. All right, so now we got to go back to Sunday. Okay, this is an hourly chart. Okay. I think I was actually looking at a 4-hour that day when I put this trade out. May 31st, June 3rd, let's see, June 2nd. June 2nd was Sunday. Yeah, May 31st was Friday, June 2nd. So that would be this opening candle here. See, I was hoping to get a pullback down into this area, okay? Now, let me show you this. Some of you are partners and you've not seen this, but you should have because it's in your toolbox. That right there tells you why I was looking at that price. Right there. That's it. It's called the elbow. If you're a partner, you have it. Okay? We haven't talked about it in a while, but we have 8, 9, 10 tools. You only need a couple tools on your chart at any given time. Yes, CHR, we code exclusively for the DT Pro platform. All right, guys, so I showed you why I was looking for the pullback there. We didn't get it, and so let's get back to I want to pull this off. Remove. Okay. Indicators. All active indicators. CF. Remove. Yes. Elbow. Remove. Yes. Close. All right. Hang on one second, guys. Okay, let me type in one. Because everybody goes to lunch. They leave me here to fend for myself in the afternoons. Just take the free trial. CH. Because people get, let me explain to you why I take the time to do this. See, when people come to the site and we have the little chat app, if I've got my light on green, and then when people type in a question, they get ticked off really quick if they don't get an answer. Now, I know what you're thinking, well, tough. I know, but I'm the same way. When I go to a website, I'm always very suspicious if there really is a live operator or if it's a bot that's going to ask me some mindless questions and just try to get my email address. That bothers me. And so I'm sensitive to people who come to our website because sometimes I get messages when I leave my desk and forget to turn my light out. I come back to an angry message. I knew there wasn't any real live operator, so I should just turn my light off when I'm doing the show, I suppose. But when Bert and Leslie and Michael are here, they can answer questions too. So Is there a link to listen to that? Okay. All right. I'm gonna type in one more thing, and then I'm gonna close the chat app so I won't be interrupted again, guys, because that's not fair to you, the ones that are tuned into the radio program. Okay. I'm gonna give him the link to tune into the radio program, and then it kind of says it right on the home page, but it's easy to miss. I really am going to cover the soybeans here in a minute. You guys should get like a prize for having the stick-to-itiveness to hang out through all this. Or not, I don't know. I suppose you could leave if you wanted to. But I don't want you to. No, don't leave me. Okay. All right. I'm going to turn out my light so I don't get interrupted anymore and people don't get ticked off. Ticked off. I made it funny. Okay. All right. So we're back to daily. We're on the continuous. All right. No more interruptions. Okay. So we were looking for a pullback to 1500, which we didn't get. Okay. Monday, Tuesday, Wednesday. What we did say was that if price trades, if we don't get the pullback, then consider being long above 1527. That was this price right here. Okay. Now, what did that look like up close? I'm going to show you. Soybeans. That's soybeans, yep. Okay. On Sunday night, as soybeans, and on Monday, as soybeans came up through that 1527, okay, that was in the tweet. And where did that go? Right here. Consider a pullback to 15 or buying 27 on a stock. All right. So as it came up through 27, now these are daily candles, these are hourly candles. As it came up through 27, the first move was good for 11 cents. Now we have a firm belief here that important prices and areas are almost always tested. Price came back to test 1527, took off again, 13-cent rally. It came back again to test 1527. And when I snapped this shot, which was on June 3rd, it had made a 9-cent rally. But as we can see over here, see the high, the swing high off this hourly candle was like 1536. The total swing high was up here at roughly 1540, 41. But we can see now that price actually has gone as high as 1548. So from 27 to 48, 27, 38, that would be 20 cents. So this move here, you know what? Rather than speculate, let's just change this to an hourly chart. One hour. Okay. We're going to have to scrunch it up a little bit. So we'll take this 27, drag it across like that. Okay. And so now what we've got, the 11-cent move right there, the 13-cent move right there, the 9-cent move right there. Now, on the fourth time that it came back to test, or the fourth time it was tested, on the hourly we closed below. This is a really important thing for you to grab a hold of here. I was just talking earlier with David about how when we're watching the hourly, we wait for the hourly candle to close to make our buying or selling decisions. Okay? If we're watching a 1-minute chart or a 10-minute chart, we wait for that, whatever time period you're observing, wait for that time period's current candle to close. Now, yes, as soon as that one closes, another one opens. So wait a minute, I'm caught up in an infinite loop here, or yeah, an endless loop, an infinite loop, and I'll never be able to make a buying decision. Well, that's not true. You're going to make a decision once you've observed for a bit and you get at least one new candle. So on this move down, the hourly closed back below, so we didn't get long there. Okay, over here we creep right up to 1527. Am I sitting right on 27? I am. Okay, and then we just kind of walk the line here. Here we get a move down. That move down was down to 1519. That was an 8-penny move to the downside. Using smaller time frames, using the slingshot, you might have been able to take advantage of this on the downside. Okay? We walk the line, walk the line. We get another little rally up here to 1532, so that's a 5-penny move. Then we close back below, go sideways, then we close above. Now, this is the one I really want you to see. Once we close above here on the hourly, the move up, the pullback right to the number at 27, just as if it were a zone, except this is dynamic and not fixed. Over time, when dynamic holds for this long, it actually becomes fixed. And then the move. Now this move from 27 to 28 is 21 cents. That's the same as 21 points in the S&P. So just this final leg here, if you didn't get any of the rest of it, well, if you got that first one for 11, okay, 11 times 50, $550 per contract. If you're a 10-contract trader, that's $5,000 on a Sunday night. Okay. Let me also tell you that trading's risky and you can lose all your money. Okay. That's not just something you're required to say by law. That's the truth. Okay. You can lose all your money. A good way not to lose all your money is to always use a stop. After that, learn how to trade. Okay. Those two things will give you a lot of longevity in this business. Always use a hard stop and learn how to trade. You'll be amazed how far your money will go if you always use a hard stop and learn how to trade. Now, this final move, which went from 27 to, what did I say the final number was up there? 48.75. So that would be 20. We'll just call it 20. 20 times 50 is, ta-da, $1,000 per contract. You can trade as many contracts as you want. How many contracts have been traded in this hour? Right here, 19,000 contracts. In the hour we're in right now, there have been 5,120 contracts traded so far just in the last hour, and we've still got 14 minutes left in the hour. Okay. So if you go out on the website and you look at this, just remember that there is an additional leg that hasn't been factored in yet, and there's also a move on the downside. Okay, that through the use of smaller time frames and the slingshot, you might have taken advantage of the move to the downside. So now let me go back to the radio show chat box, not the one on the website, because I closed that one. Jerry, I'll type you in. That's Dave at Page Trader. He's been on the show for a while. The website's pagetrader.com. He gives out the web address and the phone number a couple times each day on the show. pagetrader.com. All right. Now, let me see what else we got for questions here. TuneIn's a great app. Printing body parts. RG, this article that you sent me, or Organovo Breakthrough. RG, what's that link about? Before I go to the trouble of bringing it up and loading it, I will. I mean, but tell me what it's about. Is it about the printing thing? How's the S&P looking, and where is support? Okay, Don, we'll go look at that. Richard says, but you closed above it 8 or 9 hours earlier. I'm sorry, Richard. I need you to reformulate that question so that I can give you a decent answer. Rick says, thanks for everything. I'm up 58 ticks in the beans in 12 trades. In Sim. Good job, Rick. You know what? That Sim part, man, guys, hear me, please. Stay in the simulator until you're consistently profitable. That's part of our whole teaching methodology. Now, we all know the tragic statistics when it comes to trading, and your neighbor, your neighbor, the guy that cuts your lawn, can tell you, the horrible statistics for traders. Now, how does a guy that does your lawn, how does he know the statistics? Well, probably because he tried it, and he was smart enough to use his last $200 to buy a weed eater and some hedge clippers. That's how he knows, okay? But if everybody that wanted to become a trader followed this advice, those statistics would be so drastically altered. Instead of you getting snickered at when you tell people that's what you do for a living, you'd command their respect. And this is the little bit of wisdom, okay? You can take it to the bank or not. It's up to you. If everybody stayed in the simulator until they were consistently profitable and then only traded one contract until they made $1,000 in the market, and then added just one more contract and traded 2 contracts until they made another $1,000 in the market, and then only traded 2 until they earned another $1,000 in the market, the whole landscape of trading would look completely different. You would not even recognize it. We'd be right up there with bus drivers and school teachers and pharmacists, as opposed to being the fodder of late-night stand-up comedians. Okay? It's that simple. Well, Dwayne, if it's that simple, why won't people do it? I don't know. Honestly, I don't know. Well, I kind of do. It's the nature of man. We're adventurous. We got money in the bank. We really don't want to work that hard. We just want to click the trigger, make a lot of money, and feel important. Okay? That sounds like the voice of experience, now doesn't it? It is. Okay? I learned the hard way. You don't have to. You have the benefit of a number of people coming on this radio program every day and telling you, don't do that. Don't make the same fatal mistakes that every other trader makes. See, that's easy. Anybody can do that. In fact, everybody does that. Why don't you do something different? Okay, now back to your question, Richard. I hope you've reworded it for me. The soybeans walked the line but closed above 1527. Okay, they did walk above the line. Okay, and each one of those little walks provided opportunities to take some profit. Let's blow it up real big so we can see it. Let me move this over here. Okay, let me get your chat box right here. Okay, so price closed above 27, made a nice move. Or are you talking over here? Okay, it closed above 27 right there. Right there it closed above 27. Okay, that's where that candle closed. The next candle ran up to 1530. Okay, so that's a 3-penny move. We only look for a couple points a day. That's the equivalent of 3 points in the S&P right there. Okay. Then it came back the next hour to test 27 again. And then the next hour, it delivered another 3-point gain. And then, this is going to get old. In the next hour, it came back to test, let's see, that was this one. That was that one. I'll do it like that. That was that one. Then it came back to test 1527 again, and this time it delivered 3.5 points, but we'll just call it 3. So the next hour delivered another 3. See, I was giving you big numbers. I wasn't breaking it down to the smaller time, but I can. It's really good. I'm glad you brought this up. Now it comes back to test 1527 again in the next hour, and the swing high of the next hour is 1530, so another 3 points, 3 pennies, same as 3 points. Okay. And the next hour, it only got up to 29.5. So the next hour was only good for 2.5 pennies. That was the maximum available. You might have taken some of that or none of that. Okay. The next hour, price comes back to test 27. Now it may have run up and down a bit. We'd have to drill down to like a smaller time frame, 10 minute, 5 minute, 1 minute. Ultimately, it closed below. Okay, so this might have been an hour where you got stopped out, because see, 1, 2, 3, 4, 5 hours in a row that produced the opportunity for relatively simple profits. That's not going to go on forever. Okay, that part we talk about trading being risky, you lose all your money, you got to use a hard stop. Okay, and people fight that and they resist that, and when you ask them why, they go, well, because I always get stopped out. And I go, oh, well, that's kind of the point. They go, no, you don't understand. If I put in a stop, then I get stopped out to the tick every time. And I go, really? Do you really? They go, yeah, I do. And I go, well, I'll pay you for your system. What do you mean? Well, if you've developed a method where you know where the price is going to the tick every time, I'll pay you a ton of money for that system, because that's a money maker. If you know where price is going every time to the tick. See my point? Okay. So maybe you get stopped out on this one. Maybe by breaking it down into smaller time frames, maybe you don't get stopped out on this one. Maybe you don't get a trade entry. Maybe you do. Go look at a smaller time frame and see what you find. See, too often, well, no, let me just say, I want to encourage everyone. You need to explore these avenues yourself, the highways and the byways and the alleyways, because having some guy tell it to you on a radio program or having some guy preach it at you in a seminar, okay, well, that's good information, but it doesn't even hold a candle to when you begin to explore and discover it for yourself. When you discover something for yourself, it's not just usable knowledge, it's something you actually become quite passionate about, okay? So I encourage that, and that's why when people take the free trial, we really, really want you to download the platform and install the indicators so that you can take maximum advantage of your 5-day trial. Rather than just being a spectator and just watching, get involved, roll up your sleeves, get your hands dirty, ask questions. You'll be amazed at the capabilities that you have locked up inside of you. They're infinite. They really are. Okay, and so then we had a few hours closing below, and then we get an hour that closes above. And so from that close above, we ran up. And the next hour, we got a swing high of 31. So that would be about a 4-point move. And then we pull back to test 27 again. And that's when we make that big run for like 20 cents. And then we came back. Then we came back and tested 27 again. And after this test, we've got up to 37. So we've had another 10. So after this big 20-cent move, we had a 10-cent move. And see how it came back and tested it to the tick, 27. So whenever I tweet out a number, I've done my best work, and I really believe that to be a very important area. And that's why we say important prices, important areas are almost always tested. Okay, from Sunday night, now I just recapped today and a little bit of Tuesday. I didn't even get into Monday. okay? But you can do that yourself, okay? Download the platform, install the indicators. In fact, whatever platform you already have. You can draw a horizontal line at 27. You can put any time frame on you want. And you can watch how price just plays beautifully off that 27 over and over and over. I hope that answered your question. If you're taking 3 ticks earlier, you should also be taking the same later on. No, I never said anything about taking 3 ticks per trade, Richard. I said 3 pennies. 3 pennies is equivalent to 3 points in the S&P. Each penny has 4 ticks in it. So a 3-point move in the beans, or a 3-cent move in the beans, is actually 12 ticks. Each tick pays $12.50. There's 4 ticks in a penny. A penny pays 50 bucks. Now, what I'm showing you here is what the market made available. If you have a business plan or trading plan that says my daily goal is 2 points, then off this candle you got your 2 points, and everything that happened after that, it's not even important. But maybe you have a different plan. Maybe you want to get, I don't know, whatever it is that you want to get per day. You build your business plan and trading plan around whatever it is that you want to accomplish. But in doing that, you have to ask yourself some very important questions. Okay? Go to the CFRN website, and over here at the top, click on Emini Radio Blog. Okay? And once that comes up, if you're using the Chrome browser, hit Control F on your keyboard. Okay? Control F. It will open up this little box right here. Type in goal, or goals, I believe it is. Oh, no, it's goal right here. 4 critical goal-setting tips for E-mini traders. This is very important when you go to write your business plan and your trading plan, because what you write down is what you're going to live by. Most traders, or many traders, fail because they don't have a plan. And the ones that do have a plan fail to follow the plan. You don't need to be a great trader to make money in the market. You don't have to be a great trader. You simply have to have a good plan, and you have to be great at following your plan. If you can become great at following even a mediocre plan, you'll be okay. Now, every goal that you have is going to translate into one of the rules in your business plan and your trading plan. Okay? Number 1, the goals must be clearly defined. So often when I'm teaching and training and I'm meeting with someone perhaps for the first time, and I say, well, what kind of goals do you have for yourself? Well, I just want to make some money. Okay, tell me more. Well, I want to trade the futures and I want to make some money. Well, no, I need you to define that for me. Well, okay, I want to make a lot of money. See, that is not a clearly defined goal. A clearly defined goal would be something like, well, my monthly expenses are $4,780. I need to be able to cover my monthly expenses. I need to put away money for college and retirement, so I need a monthly income of $10,000. Okay, now we can work with that. See, that's a clearly defined goal. Not just I want to make some money, but my goal is to make $10,000 a month, which is $2,500 a week. If you're trading 10 contracts, as an example, and that's all it is an example, you would need roughly 5 points over the course of the week. Let's see, 2 points, 10 contracts is $1,000. So to make 2,500, yeah, you'd need about 5 points over the course of a week if you're trading 10 contracts to meet your monthly income goal of $10,000. I'm not saying you can do that. I don't know if you can or not. Is the possibility there? Well, yes. Does the market really move that far every day and every week? Yes. Does it really pay $50 a point or $50 per penny? Yes, yes, yes. All of those questions are yes. But the question is, can you do it? Now that's up to you. If you stay in the simulator until you're consistently profitable, and then you only start out with one contract, you certainly increase your chance for success exponentially. Now, once you clearly define your goal, now part of your goal might also, clearly defined goal might also be, I only want to work 4 hours a day, or I only want to work 3 days a week. You can have any kind of goal that you want as long as it's, number one, clearly defined. Number two, realistic. See, not so long ago, I had someone in that initial conversation, they said, as we were going, what their goals were going to be, well, I want to take 20 points a day out of the S&P. I said, come again? They said, well, that's my plan. I want to take 20 points a day out of the S&P. I said, okay. I said, let me show you one little thing. Now, today's a day that you could actually make an argument, okay? The average daily range based on the last 14 days is 21.3. But as you can see, that just a few days ago, it was down around 17. We got as low as 12 right there, the average daily range. Over here, the average daily range was 13. See, when the market is only handing you 13, 14, 15 points a day, okay, from stem to stern, the entire Globex session, from the open in the afternoon till the close the following afternoon, the market's only making 20 points available, or 14 points, or whatever it is available during that 24-hour period. For you to say, I'm going to take 20 points a day out of the market, that's not realistic. It's not realistic. Everything that you write down in your business plan and your trading plan has to be realistic. One of the reasons a lot of traders blow up is because they get frustrated because they have goals that are not realistic. And if you have unrealistic expectations, you are just setting yourself up for failure. That's why I've written all this down for the students. Okay? Goals must be attainable. Attainable and realistic are pretty close together. Go read this blog post, and I'm not going to read it all here on the show, but it's out there on our site. You can go read it. I made it available to the public, to everybody. You don't have to be a partner to get to this file. Goals must be measurable, okay? You need to be able to measure your progress on a daily, weekly, monthly, quarterly basis. I'm not saying that you need to beat yourself up and paint yourself into a corner, but it's kind of like kids in the back seat going, are we there yet? Are we there yet? Are we there yet? If you don't have a measurable goal, you don't know when you're there yet. And I can't tell you how many times I've had traders call me literally in tears, and I'm like, man, what is wrong? You were on top of the world this morning. You'd already made 5 points. And the answer, I know what the answer is going to be. I kept trading, and not only did I give it back, now I'm down 5 points. Well, okay. Tomorrow's a new day. You were using a hard stop, right? No, I'm still in the trade. Get out. But maybe it'll come back. Get out. Well, maybe I'm just going to hang in a little bit. Get out. See? It's those hard decisions, but if you make them up front, away from the heat of the battle, when your emotions are not tied to the trade you're in, you can actually make good, rational decisions. Remember, you don't have to be a great trader. You simply have to be great at following even a mediocre plan, and you can do okay. Measurable, attainable, realistic, clearly defined. Okay? Let me go back to the chat box. Richard says, okay, but that is what I meant. Okay, well, did I answer your question? That's the thing. I'm trying to make sure I answer your question. I don't want to leave any questions unanswered. I've only got a little bit. I got a few more minutes, so if there's a question you typed in and I've not answered your question, by all means, copy, paste, put it in again, because by this time at the end of the radio show, the scroll is just huge and there's a lot of questions, but I don't want to leave any questions unanswered, so type it in again and I'll get to it, okay? The soybeans, are they, let's see, what was that question? Are soybeans very active at night? Kellen, that's a great question, okay? And I'll show you how we find out. Let's do this. We'll do this. This is an hourly chart. Let's go ahead and break this thing down to like, we'll go 5 minutes, okay? Here's the volume chart down at the bottom, okay? Now, this is a Globex chart. So let's go back to 3:20 Chicago time, okay? During that 5-minute period, there was 10 contracts traded. In the next 5 minutes, there was 90 contracts traded. In the next 5 minutes, there was 5 contracts traded. In the next 5 minutes, there was 83 contracts traded. Okay, see how I did that? Let's bump it up. Let's go ahead and bump it up to an hour, okay? All right, at 1 a.m. Chicago time, there was 1,700 contracts traded during that hour. 2 a.m. Chicago time, during that hour, 1,600 contracts. And then it fell off the next hour to 288 contracts. Next hour, 1,000 contracts. Next hour, 1,600 contracts. Next hour, 1,000. Next hour, 1,000. And then, look at here, we get into the, heading into the Chicago Open. This hour, we got 10,000 contracts. 12,000 contracts. Now this is getting into the day session. So what you, Kellen, your answer lies in these little small candles down here. Just drop a volume chart, okay? And to do that, you just go Insert, Indicators, Volume. See, I just took mine off. Insert, Indicators, Volume, and there it is. So if you're trading, 2, 3, 4, 5 contracts, 10 contracts, you should be able to trade during those hours without too much concern. The other thing you have to concern yourself with during those hours, okay, is whether or not there is liquidity at the next tick, okay? I'm going to have to, let me adjust this real quick. Oh, because this is the continuous contract. Hang on, let me change my contract symbol real quick. ZSN3. Okay, now let me bring up a DOM. Okay, so that wasn't the issue. Oh, because it's showing over here. I think Michael must have set this DOM up. I want to see display items. Volume. Auto center price. Histogram. I don't want a histogram. Apply. Okay. But what I want is I want my volume totals here. Where is that? Auto sum, the bid and the ask. Apply. I'm not showing any volume in this contract. Why is that? ZS. Tell you what, let's jump over the ES for a minute. Because I want to show you what you need to check if you're going to be trading overnight. Just cancel that. Go over to the ES, bring up a DOM. Okay. See, these are contracts on the bid side and contracts on the ask. Sometimes what can happen in thin trading overnight, see how on the S&P there's no gaps between the bid and the ask. There's plenty of activity on both sides. what you have to be careful for trading overnight in a thinner market like the soybeans is there could be what's called a spread. In other words, there's a guy on the bid at one price and the other guy on the ask, maybe they're, you know, a half a penny apart or a penny apart, okay? If you're going to trade there, you've got to factor that in. And if you need more explanation on that, a great one to ask, call Bert, because he's in the office right now, and he'd be more than happy to really kind of dig in and explain that concept to you. 866-928-3310. Also, if you're on the free trial and you've downloaded the platform, tonight, watch the beans trade and see what that liquidity's like. See if there's a spread during the hours that you want to trade. Check it out. See if you could get filled, okay? This way, rather than just some guy on the radio telling you, you know yourself from experience. You saw it with your own eyes, okay? All right. So let's see what other questions we've got here, and then I got to go run. What is the setup to enter a zone-to-zone trade? Oh, that was the, Jessica, that was a question you asked earlier. Now, I think that's the last question I've got. Oh, yeah, Pete's right. Beans closed, but there still should have been some volume displayed on the electronic, I think. Eugene, Dwayne, if a trader has an edge, how is it possible he's up early and ends up with a loss? I don't understand that logic. If he's disciplined, the results should continue to be the same. What do you mean by that point? Great question, okay? We know that getting stopped out is part of the business, okay? Doesn't matter what method you use, and it doesn't matter what someone has tried to convince you with their, you know, pie chart or their graph or their quote-unquote back-tested results, okay? That stuff's history. All that matters, honestly, guys, is what's happening right now and what's going to happen tomorrow. That other stuff, it's really easy to put together a set of figures and data points and, you know, so, but to your question, how can that happen? Very easily. A guy wakes up, he takes a trade, he makes 2 points, he takes another trade, he gets 2 points, he takes another trade, he gets 1 point. He just had 3 trades in a row, he's up 5 points, he's on top of the world, he's unstoppable. He goes to lunch, grabs himself something to eat, comes back, sits down, and he gets stopped out 4 times in a row. And on the 4th one, he's so aggravated and so frustrated, he slips his stop. He's not disciplined. And now he's gone from being up on the day to being horrifically down. That's how it happens, Eugene. And unless you adhere to a strict set of rules, it will happen to you. It will happen to anyone who does, and that is why we recommend to all of our students that you have a daily goal. And, you know, we like the 2 points. We think that's a nice round number. It's what it is, it's $100 per contract. Doesn't matter what market you're trading in, it's $100 per contract. Whether it's the S&P, the Russell, the Dow, doesn't matter. Okay? See, that's not only is it realistic. Where's my list? 2 points a day is clearly defined, realistic, attainable, and measurable. Okay? Now, once you get the 2 points, and that's your goal for the day, and you come into work prepared, hey, if I get it in the first trade, great. If I don't, if I get stopped out once, twice, 3 times in a row, doesn't matter because I have an edge. I have a definable edge in the market. All I have to do is continue to apply my edge. And so some days you might have to work bell to bell. It might take you the entire day to get your 2 points. There's no guarantee you're going to get your 2 points. That's the reason you stay in the simulator until you're consistently profitable. you reach a point where you become confident in your ability to pluck a couple points a day out of the market. Now, that solves the problem for trader A, but trader B, who doesn't have that clearly defined goal, who just comes in every day, yeah, I'm just going to go in and trade a little bit, it doesn't end well. See? If you come in and you know I'm going to get, now again, our number's 2, yours might be 3. I have one friend, his is 1 point. He trades a lot of contracts, but he's only looking to net. That's after commissions. He's looking to net 1 point a day. And people tell him, hey, dude, but you're so talented. You're so good. Why don't you stick around and make some real money? And he goes, huh, brother, I make real money. And getting a point a day is something that I can sleep at night. I know I can do it. Even if I wake up feeling a little peakish, a little under the weather, I can sit down long enough and focus long enough, I can get my point. And once I get it, I'm not giving it back. I'll never forget, as long as I live, the first day that I made 5 points and gave back 5 points. I was physically ill. And I said that day, never again. Okay? But I hear that story over and over. I think most people have to experience it at least once for themselves, and then once they do experience it, they go, huh, whoa, I'm not doing that again. Okay? Of all the traders that I know, I only know really 2 who trade bell to bell and do well. All the rest of the successful traders I know have a daily goal. And once that daily goal is met, they stop. Now, sometimes they stay in the office, they work on their charts, they look for new setups, they look for new edges in the market. You know, that's part of the job. The job is more than just entering and exiting trades. So they do work, and perhaps they even test out some of the new edges they're working on in the simulator. But once they get their daily goal, they're done live trading for the day. Okay? So, again, each person has to sort that out for themselves. You're very welcome. My pleasure. How does the S&P look this afternoon? Okay? That's probably a great question to end on, and I am going to end it on this question, guys. Unless I've missed something, type it in again, and I'll cover it. Oh, the zone to zone. I'm going to cover that one for you, too, because I promised I would, and I will. Okay, we hit this zone. We fell out of bed here. We walked the zone for 1, 2, 3, 4 hours. Then we dropped. We had a tweet to consider being short below 1619. That triggered, and over 1, 2 hours, we got all the way down to the next weekly trading zone. And if you're a partner, you know that was the zone. You got it in your email before the market opened on Monday. Once we hit the zone, now, let me say this too. David had a number that was similar. His methods are completely different from mine. Mike Reed had this something around this number. His methods are different from mine. Okay? When you get a couple of people coming up with the same number, that's really like a heads up. Oh, 3 guys with 3 different methods think that area is important. Maybe it is. Now, sometimes price will blow right through it like it's not even there. But on this radio, that's one of the reasons the radio program is really important for guys who are not even partners, but you're trading. Maybe you've got a number, and then you hear 2 guys on the show start talking about that same number. That's some confirmation for you, okay? But anyway, we've gone sideways for 1, 2, 3. We're in the 4th hour. It's 12:22 Pacific time, so we've got another 38 minutes left in the life of this candle. Depending upon where this candle closes, I might consider being long. Okay. Here, this candle closed. Had you gotten long right here, you didn't get much movement. Okay. Now, getting long right there, unless you went down to a smaller time frame to execute your trade, let's say you were just going to trade it off the hourly chart. So this closes, and you're going to buy the open of the next candle. Your stop needs to be below the zone, below the swing low, okay, which means you probably got stopped out on that trade if that's how you entered it, okay. Now that a little time has gone by, okay, we know a couple things. In order for the market to rally and get up to the zone overhead, this is an obstacle to the trade. This price right here, that's an obstacle to the trade. The market is putting obstacles in its own path. We haven't had a single close down below this zone. We've spiked it this hour, but no closes below. So what that's telling us is that the market does want to go higher. It does want to reverse this situation and head higher. But it hasn't been able to do that, and in fact there's a high, there's a lower high, and unless something happens here in the next 30 minutes, we're going to have an even lower high, okay? At this point, I need to start thinking about what happens if we don't rally, okay? Now there's the swing low of this whole move down. That's our swing low. What price is that? The swing low of that candle is 1605 and a half. I'm going to go, let me look at my zones. 16.0. Okay, our next zone is way down there. Okay, so I'm going to give this thing, I don't want to get faked out on this move. I'm going to go 1602. Okay? Now that's 5 points away from the zone. You might say, well, that's a little much, don't you think? Okay, so the swing low was 1605 and a half. So 2.5. I don't usually do things on the half. You know what? We're going to go 2. In fact, I will send this out as a tweet right here. $16.02. The market's demystified. No secret. It's just how you read the chart, that's all. And that's what I want all of you guys to learn to do. I want you to learn to do this for yourself. Okay, so let's send out if you follow me here on Seeking Alpha, you'll get an email when I tweet. So ESM3, consider being short below 1602 if the opportunity presents. Those of you that follow me on Twitter, when you get this hashtag CFRN trade, you can filter for those so that you only get tweets that have an actual trade recommendation or trade idea in them. Because I tweet a lot of stuff. Like yesterday I tweeted pictures of me and my kids having pizza. Okay? But I only put this hashtag in if there's an actual trade idea. Okay? Okay, that covers the short side. So now we got to tweet out, consider being short below 1602 if the opportunity presents. Well, what are we going to do about the long side? Okay. We've still got 32 minutes left in the life of this candle. Look at it. It looks like it wants to get going here. How much room do we have between this high and the high above it? This high is 13.5. This high is 16.25. There's actually more than 2 points between this swing high and this swing high. But we've got a lot of obstacles in our way, guys. We've got this one, this one, this one. And I would expect 1619 to potentially be rejection, the first trip up. So you know what I'm going to do? I'm not going to put out a long idea right now. I'm going to go run the errand I've got to run, and when I come back, if I see something, I'm not saying the market's not going higher. In fact, it's looking pretty bullish. It looks like it wants to go higher. But when I can see all of these really obvious obstacles in my way, I'd just as soon wait until I have a clear idea or a clear picture, okay? On the downside, to me, that's crystal clear. If we get below 1602, there's the potential we could drop 20 points maybe. Maybe not all 20 at once, but between now and close of business Friday, we could. So I'm going to wait on the long side. Could you run through how you got 1602 again real quick? Sorry, the phone rang. I took this swing low, 1605.5. I normally give 2 points room to run, but because we have so much room to run on the downside here, 20 plus points, I decided to give it a little more room because I want it to really show me. I could go 1603 here, and that would fit within my normal parameters. In fact, it's probably good I say that. 1603 is where I would normally put this, but I decided to go with 1602. And that's one of those things that's part of my style, okay? I can tell you exactly why I picked the number, but why I went with 02 instead of 03, a personal preference today based upon action in the market. And see, there's certain things, just like with the piano. A person can teach you how to play the piano, but they can't teach you how to make beautiful music. That has to come from within. I mean, they can teach you this is the A or the B key or the C key, or this is how you make a chord, you know. You ever heard somebody play, and even though they hit all the right notes, it didn't really sound like music? See? So we can teach you the fundamentals of trading, but then somehow it has to all get blended together inside of you. And that happens over time. It will not happen overnight. And if you try to make it happen overnight, you'll get frustrated and or go broke trying. So please don't. Okay? All right. Okay. Okay, now the final question. How do you take zone-to-zone trades? Well, I just showed you here. If price goes below 1602, I will consider that a trade all the way down to the next weekly trading zone, which is more than 20 points below. Okay? Up here, on yesterday during the radio show, price had closed strongly below this weekly zone. And I was trying to get us into a tweet, and I didn't. That's why it says the one that got away, because we never took this trade. Okay? Now, when price approaches a zone, like here, it came back to the zone. I mean, you can simply buy the zone. Okay? That's a zone. I'm going to buy it. I'm going to risk 2 points. If you had did that here, you'd have got stopped out. Okay? See the tail on this candle? We had no close below the zone, but a 2-point stop. They would have run your stops. Whoever your they is, they got you. Okay? So what I recommend is that you, when you see price, now up here, had you just sold the zone, you'd have been fine. You could have traded from 37 all the way down to 26, 25. From 37 to 25 with no problem. You would have not gotten stopped out with just a 2-point stop. What I recommend that you do is that as price approaches a zone, it does its consolidation thing, and it looks like it's getting underway, go to your slingshot and try to find a long entry in this case that will take you to here. See, the way this played out, it would have been very hard to trade this zone to zone unless you got in on this candle. Because this little thing right here, that's a bearish, well, it's not a true bearish engulfing, but this would have, if you'd have been selling the zone, this would have stopped you out. The question is would you have the wherewithal or the intestinal fortitude to get back in on this candle? Because if you did, you would have not only made up for that 2-point stop out, but you'd have been handed a nice paycheck. What was that, from 26, is that right? 25 to 37. That's a 12-point move. So if you got stopped out for 2 points and you were willing to get back in, you could have still netted, maybe 10 points out of that zone-to-zone move. Trading zone-to-zone after the fact, okay, once it's already happened, it looks so simple. But guys, I got to tell you something. Everything looks simple on a historic chart. Don't ever let yourself get sold a bill of goods based on historic charts. Somebody with just a little bit of talent can make your head spin with historic charts. Tell them you want to watch them trade live in real time. And they may or may not let you, okay? And I'm not saying that just because they won't let you trade live in real time that their information is worthless. I'm not saying that. I'm simply saying that if all you're being shown is historical information, then make sure you understand that that is the context, okay? Ask them, okay, I understand that's not your thing. You don't trade live in front of people. I understand that, and it's okay. But this information you're showing me after the fact, could you have known this before it happened? That's all I'm asking, and I'm not being snarky. I'm just trying to figure out if your method is the right method for me, because I'm about to spend money with you, and so I just want to, and if they start getting fidgety and hostile and don't want to answer your questions, then you know what? Then maybe that's not the right mentor for you, okay? And again, I'm not saying that every person should be willing to trade live in front of you. That's just not that's not their gig. So that's not the acid test. The acid test is what you're showing me after the fact. Did you know it before? And can, with what you're going to teach me, will I be able to know it before? Or at least have a reasonable idea before? And if the answer is yes, then, well, proceed. Okay? Keep investigating. Keep asking questions until you're comfortable and confident. Okay? Everybody deserves to be treated with dignity and respect. If you ever find yourself in one of those situations where you're in a trading room and you feel like you've been taken hostage by some guy, shining the light in your face, slapping you around, do not stand for that, okay? I saw that happen for too long, and shame on me that I didn't stand up for those people and storm out a lot sooner than I did. I sat and watched it and listened to it for way too long. It broke my spirit. It broke my heart. And I finally had the stones to walk away. Okay? Shame on me. I hope God has forgiven me. I've forgiven myself. So in order for me to be able to forgive myself, I'm sure He's forgiven me. Okay, that's it, guys. I think I've got, I got to go. My plan, part of my plan is to never draw down more than 5% of my account any single day. If I do, I stop trading for the day. It's better to keep your powder dry to fight another day. That is a beautiful statement. You should type that, print it, and hang it on the wall. And on a tough day, it's right there to remind you. I'm going to say it again for the benefit of everybody. Part of my plan this is not my plan, this is Pete's plan. Part of my plan is to never draw down more than 5% of my account in any single day. If I do, I stop trading for the day. It's better to keep your powder dry to fight another day. Very well said. And guys, you can tell the platform here, the DT Pro platform, you can tell it that, hey, the most I ever want to lose in one day is X amount of dollars, okay? And once you program that into the platform, it will lock you out. Once you hit that limit for the day, you can't trade to the next session. This prevents you from ever getting caught up in revenge trading, or I'm going to get even with the market, or, you know, I've been stopped out 3 times in a row. There's no way it can happen 4 times. Yes, it can. It can happen 40 times. It can happen 440 times. Never say never, okay? So when you're writing your business plan, writing your trading plan, I recommend that, see, like now, Pete has established 5% of his account balance. Okay, maybe you want to go with just a hard figure. However you want to do it, and then stick to it. And one way to make sure you stick to it is if you program it into the platform, it'll still let you watch the charts, it'll still let you trade in the simulator, but it will not let you make a live trade until the next session. Okay? That's a tool at your disposal in the DT Pro platform. Please use it. Okay? All right, guys, that's it. I am done, wore out, starting to lose my voice. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.
You're listening to CFRN, the Christian Financial Radio Network.
Hey, trader, what if I told you there was an indicator set that worked well in all markets, from gold to soybeans to E-minis? What if I told you it worked well across all time frames? Would you believe me? You don't have to. Test drive our platform and indicators with live data for a full week and see how CFRN can change your trading forever. No strings attached, no credit card required. Get started today at www.cfrn.net.
How are we? We good? Oh, it's going to be like that. All right. Let's go Luke 19. While you're turning there, let me just